low commissions. Try it out and leave us a review.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Amazon earnings are out, and they're not that good. It is Thursday, February 6th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Dylan Radigan in Milan, Ilya Spivak in San Francisco. To take you through this hour as we wrap up the trading day, if you're on YouTube, come over to the platform. Tell us what you think of these Amazon earnings, or rather, trade the Amazon earnings on the platform. Come over to the chat and tell us what you think of them and how they're trading right now. Gentlemen, 227 here in the after hours. Just a quick brief update on that Amazon. Earnings per share are much better than expected at 186 versus 150. The net sales, 187.79 billion versus an estimate of 187.32 billion. However, Amazon Web Service net sales, 28.79 billion versus an estimated 28.82 billion, and they are guiding for their first quarter net sales in the range of 151 to 155.5, whereas the street estimate ahead of time was 158.64 billion. So a miss on guidance here. The stock is down after hours. The NASDAQ futures take a hit. The S&P 500 futures ultimately take a hit, which were trading up near 6105 or so before the release. Net, though, when we take a step back and we look at the markets here today, what kind of day was this today? We really didn't do anything.
Nothing.
The market that grinds sideways in the S&P. The NASDAQ's a touch warmer. Dow, Russell, a touch softer. Yields are twisting across the curve as the ramifications, perhaps, of what Scott Bessent, the Treasury Secretary, said regarding the Trump administration's targeting, for lack of a better phrase, of the 10-year yield. We see that gold and silver have a day where they pull back and then rally by the end of the session. Oil continues to break down, and in the world of currencies, did the Bank of England just make a policy mistake? The British pound down today, but off the lows. Guys, let's go right into this because this is an abbreviated edition of Overtime here at the bottom of the hour. The prediction trade is back this Thursday. Myself, Jeff Joseph, sitting down with John Rothschild. He wrote the book on how to handicap sports betting, particularly for football. It was a very interesting conversation. If you're interested in the Super Bowl, go check it out. It's going to be here right after Overtime at 4:30 Eastern, 3:30 Central. Intro done. Ilya, it's the day before non-farm payrolls. All was quiet in the house, even the mouse. What do we take out of today's equity index? Lack of anything.
I think what we take out is that economic data matters once again, because when we got those ISM numbers yesterday and those PMI numbers, that's where things got moving. And the important thing here from a Fed perspective is that Fed policy expectations have done absolutely nothing for weeks. That's through the DeepSeek fiasco, through the tariffs that were here and then not here, through the Fed policy announcement itself. Fed policy expectations, as the markets see them, baked into Fed funds futures, they've been stable. And that tells us the markets are speculating perhaps on something else. The curve has also flattened significantly as the front end has held, because those expectations have held, but the long end has significantly moved, especially, of course, yesterday on those ISM and PMI numbers, which were much, much weaker and, of course, very worrying in an environment where the U.S. service sector is the only thing powering the global economy. Not just the U.S. economy, the global economy. And when the news is that you've hit a 12-month low on U.S. growth and it's the cooling in the service sector doing it, and new orders are down, and all of the things that you might expect at the beginning of a downturn, and that's the driver, well, you're probably going to expect lower yields downwind, which is exactly what we've seen in the bond market at the longer end without the front end moving. So this makes for a really interesting setup for non-farm payrolls. It ultimately doesn't need to do a whole lot but unlock the markets to keep doing what they're doing. The PMI numbers told us that employment actually was relatively stable. That wasn't why the aggregates were low. But we also know that employment is relatively lagging. When new orders are down, but employment is stable, you sort of look downwind and go, well, if new orders are right, then employment will catch up on the downside. That's where the pain comes last. So when you look at these numbers, you sort of wonder what the markets will take of them. If they come out relatively in line with expectations, which has been generally the tendency for U.S. economic data recently, you sort of look at it and say, all right, well, if the PMIs are right, then there is no impetus here for the Fed to change course near term, but downwind, you probably still have economic weakness as a building risk. And that ends up being higher bonds and maybe stocks that start to trade differently than they have been. They've been so sensitive to Fed policy odds. Maybe now they actually start to trade recession risk.
Dylan, Amazon misses a little bit, obviously a bit of a disappointment, but the longer term picture here is of a company that remains at the center point or close to the focal point of this next stage AI revolution. With Amazon trading in around 230 right now, it's bouncing back a little bit here after hours. Is this a stock, if you see a discount here, would you be willing to buy in at this point?
For sure. Absolutely. Absolutely. But I say that because I don't own the stock. I mean, I own Meta as a stock but not from a trading perspective. Like I own Meta to own it.
Sure.
And I would love to own Amazon to own it. And so I would look at any sort of meaningful price declines as a way to own it, a moment to own it. For I think all sort of blatantly obvious reasons.
If only to contextualize, what Amazon's doing here, there was a company that had its earnings yesterday, rather this morning, that we've mentioned as part of our, phase 2 AI basket that we've been watching. IQVIA Holdings. They are a medical company that does clinical trials and uses AI to help speed up diagnoses. They had a very good earnings report today where the share price hit a high of 220. This is the kind of company that's going to rely on Amazon Web Services to continue to scale their business up as they offer those application level AI agentics to their consumers, if it's business to business or in this case, patients. They're already seeing some results and a bottoming here, a downtrend that's breaking. If companies like IQV are starting to see and realize the potential of AI in their own business, then weakness that we see in AWS, is that really something to be too worried about? I personally don't think so. I will be looking to buy the dip on Amazon tomorrow morning. I'd like to see where we settle out.
But you're doing that as an investment, though, or you're doing that as a trade?
Oh, as a trade. I mean, look, if we couldn't get knocked down by DeepSeek and we rebounded right away from DeepSeek and we had the trade war and we rebound right away from the trade war headlines, the reality is those are the big macro wins. And in the short term is what matters right now, then we still have a clear path higher for stocks, at least as far as I'm concerned. But I am beginning to get worried. Not because I think the economy is sliding, not because I think that the economy is going to fall off into a recession anytime soon. But it is worth thinking about how some of these policies could actually impact growth. We were talking about this briefly on Futures Power Hour today, thinking about the non-farm payrolls report. Most of the expansion in the U.S. labor market over the past few years has been because of an influx of foreign-born workers. And those foreign-born workers, they haven't been displacing Americans. In fact, the natural-born population workforce unemployment rate is lower than the foreign workforce unemployment rate right now. But the fact is that we've seen millions of people come in over the past few years. We're now ramping up deportations. One observation that a number of economists have made, including those at the Federal Reserve, has been that absent the flow of immigration into this country, you may actually see net zero jobs growth altogether. The companies or the industries that have been feigning the most concern over a potential shift in immigration policy have been those in hospitality, food sector, right? Not a surprise there. In agriculture. I bring all that up to say that if we go into a world where we take away labor market growth, and then all of a sudden you're looking at all this aggregate demand taken out of the economy, you're probably facing down a bit of an economic slowdown moving forward, regardless of if the tariffs are put into place here, Ilya. So I'm not ready to lay out any bear trades just yet. I'd like to see something like XRT, for example. Goldman Sachs research has put out studies showing that if you're trying to prepare for a recession, XRT typically is the most sensitive sector ETF, to articulate that point of view. And it's not like this is screaming to the downside here. It's a weak day, up by 0.19%. But generally speaking, this is a chart that has been moving bottom left to top right over the past few years. And so arbitrarily trying to say like this is the top, we need something more right now. But as the policy begins to crystallize and you see what these shifts could mean, there is a certain amount of math that needs to make this work. If we cut government spending, we reduce the size of the workforce, where does the actual GDP growth come from? And if that GDP growth isn't there, what do corporate earnings look like? What's the Fed path look like? Yada, yada, yada. So not at that threshold yet. Maybe soon. Tomorrow's non-farm payrolls, though, Ilya, it is economic data. It does matter. 170K expected versus the prior reading, obviously north of, I think it was 256.
256, that's right.
The unemployment rate is due to stay on hold at 4.1%. Wages doing at 3.8% year over year from 3.9. What makes the state of the labor market so remarkable here is that we don't really need that many jobs in order to keep the unemployment rate on a path to stay below 4.5% by the end of this year. According to the Atlanta Fed jobs calculator, we need 57.1 thousand jobs per month through 2025 to achieve that. So my question to you is, at 170K, is that the kind of number that produces the economy's overheating type of reaction, or is that the Goldilocks, not too hot, not too cold kind of result?
I don't think that a reading too far from expectations looks likely based on the way that economic data has evolved, nor do I think that's the market moving component here. I don't think the markets are going to meaningfully react to the substance of the number, because that would imply that near-term Fed policy expectations are in flux, and all the evidence seems to suggest that they're not. I mean, look at the difference between the way the 2-year has behaved really since, let's call it early November, late November, give or take, of last year. It's gone nowhere. It's been in a tight range between about the low 102s and the low 103s. Nothing's going on. The markets are not actively speculating on how much the Fed is going to move this year. They're happily sitting at a slightly more hawkish reading than the Fed for next year, and nothing's really going anywhere because the Fed is loudly saying, we are not in a hurry. This is a year for us to watch data for the most part. We'll tinker here and there a little. So the markets are, I don't think, going to be that reactive to the substance of the number. I think they're going to, unless, of course, it's some wild surprise. I think what the numbers are going to be catalyzing is the intent that markets have, but for the presence of this event risk. So once the event risk is out of the way and the markets don't have their baseline disrupted, I think they go on.
I mean, isn't the risk at this point, Ilya, that the number's much weaker, when you consider the other sort of, mild indications of slowness?
Yeah.
If the labor market shows some meaningful weakness, would that not validate some of the other data earlier this week and maybe escalate concerns? I just feel like the risk in this jobs number is that it's a bad number.
Yes, I think this is actually an environment with Fed policy expectations, at least in the near term, as anchored as they are, and yields starting to really crack lower. I think especially at the long end, of course, I think the key thing here might be that, once again, bad is bad on economic data and good is good.
That's what I was thinking.
which is different than what we'd seen, let's say, over the past several months, where it was like, okay, more cuts, good, fewer cuts, bad. The reflation idea was starting to kind of invert on the markets. It didn't really bother them, to Chris's point, made over and over, which I agree with. From mid-September to basically the beginning of December, the markets didn't really care that Fed rate cuts were falling out of the outlook. What they started to care in December as you started to approach that line in the sand at only one cut. And by mid-January, when you got to one cut being baked in, that's when the markets went, whoa, okay, hold on, wait a second. No, bad. And there you start to see things turn. So the markets are seemingly benchmarked at that line now. Now it looks like we're betting on longer-term rates. And after yesterday's data, longer-term rates very much told us we're expecting cheaper credit downwind. That's an expectation of some degree of weakness. And given that it happened with fairly shocking service sector data, it seems like bad is bad, good is good. We're trading downwind recession risk, not the near-term Fed at this point.
Dylan, this weekend, obviously, we may be facing some more, weekend gap risk. This is our last show of the week, so we're not going to be able to talk tomorrow. I was talking with Sosnoff about this morning. He actually thinks that the odds of a significant gap lower this weekend, for the third weekend in a row, would be quite low. If only because we're going through this desensitization to some of the, daily tweeting and news conferences, but also because Trump's going to be tied up at the Super Bowl on Sunday. He's the first president, I think, to actually go to a Super Bowl. So it's going to be a little bit of a scene. So maybe he's not going to be talking about tariffs before the market opens up. When you think about just general risk, is there another environment that we've been in like this where we almost have to throw away the entire framework that we operated in for the past few years? Or is that just what 2016 was?
Yeah, I actually think economic data is more important. I think that the Trump show is less relevant than anybody thinks. I don't think that the Trump show is actually that relevant. Trump is an entertainer, and so he drives great joy from wildly provocative daily commentary, very little of which will he ever actually implement. And so I actually think that the economic data, I think the risk is that people become excessively preoccupied with the president of the United States and the president's, reality show, and to the detriment of, Amazon earnings, the jobs number, and ISM numbers. So I actually think that, but I also think that the market is has pretty quickly adjusted to that.
Ilya, we can go around the markets here before we wrap this up in about 10 minutes time. The biggest place of interest outside of what was happening in stocks and bonds today, probably in the metals. Gold prices take a little bit of a step back. They dunk down into the 2850s before rebounding. 2876.70 here at the close. After hours up another few bucks, $3 there. Silver, same type of price action. You had a steep pullback early in the day. We recover back above that 1 week moving average. And copper prices, they traded up, they traded down, and ultimately they settle higher here. What's your read on the metals market as we go into non-farm payrolls and this coming weekend? Is $2,900 an ounce the new high? Is that the new ceiling for gold?
I certainly hope not, but I do hope that we get more of a pullback. I kind of missed the boat on getting long this when the opportunity presented itself. The breakout happened actually earlier in spot gold than it did in the front month futures contract. And typically I look at spot as this kind of an early indicator, because you oftentimes get the true impetus of the price action before the futures reflected for sort of carry cost calculation reasons and sort of the slight differences in the way futures are set up in the pricing than is the spot. So you can sometimes see the spot front run the futures in terms of technical confirmation, this way or that. And so I'm kind of hoping for a number out of NFP that's about in line with expectations, and that gives a little bit of relief, perhaps, in doing that on yields. Yields come back a little bit to sort of suggest the Fed doesn't need to be in a hurry, and sort of takes a little bit of that event risk out of the equation, and that lets gold come back in some, because I think we're looking at a bullish breakout, and the bullish breakout probably targets somewhere around the 3,000 mark as its next major inflection point. I'd just like to be let in at a better value.
Dylan, I know that you haven't come into the cornering of the silver market with your single futures contract or call anytime recently.
I'm ready. I got a hair trigger. I'm ready. Given the
locked and loaded.
You know, I saw a comment a few days ago.
I keep the account funded and liquid, baby. I'm ready to move.
I saw a good comment a few days ago, like, are you making fun of Radigan when you tell him he's going to corner the silver market with one call? It's like, no, I'm saying that as a legal disclaimer so that no one sends this to the CFTC and says the overtime guys are trying to corner the silver market with their
OT Hunt LLC is trying to corner that silver market again
with a single futures contract.
It just goes to show that how big my bark is. If I just move one contract, it ripples through the entire global silver market. Yeah.
If that's the case, can you maybe please jump in? Because I have these 33 and a half calls that I really like to see.
All right. I'll do it first thing in the morning. First thing in the morning.
That's a first thing in the morning. Ilya.
I'm in. I'm ready. I'm good for it. I'm feeling easy.
Ilya, you think about gold and silver.
I'll take one over coffee tomorrow.
If you're in New York, and by the way, Ilya's going to be in New York in mid-July, so if you want to arrange a trip out of here, the three of us do a show together in person.
Yeah.
We can do it.
Make it happen. Metals, it feels like, are following the opposite of yields to a certain extent, right? Did you notice today that yields and oil were kind of trading in lockstep together? As oil has a bigger pullback, bond yields are able to kind of back off their gains for the day. Yeah. The correlation between bonds and oil remains quite strong. If you're looking at a 5-day or 1 month, it's been oscillating, but not perfect, but close to near negative perfect or negative correlation, right? Mm-hmm. Bouncing between like negative 0.85 and negative 0.96. So is that really what we're on the watch out for here, Ilya? Like, is the bond yield story just an oil story that we're all thinking about tariffs and Trump and the Fed? And really, it's just that simple. It's an oil trade.
Yeah, but why the oil trade? So I think when you look at the bonds and the oil trade, they're not so much having a relationship in my mind where one affects the other. It's that they're both reflecting the same thing. And that looks like an expectation of weaker demand. And that expectation of weaker demand is ultimately a business cycle story. So I think in both of these, what you're seeing is the return of, wait a minute, is the economy going to turn? Because again, last year from May through December, the story is very simple. 58% of global GDP is three economies: the Eurozone, China, and the US. Of those three, only one had strong, positively trending growth, and that was the US. The Eurozone and China both decelerated at that same period of time. Global growth stands on one leg. That's it. You kick out that leg, there's nothing else. There's no safety net. And so when this is why I make such a big deal out of these PMI numbers. This is how these things start. The PMIs tend to show them first, especially the S&P Global PMIs, which have been much better the past several months than ISM. ISM's kind of jumped around a little, but this time they're in agreement. They're showing exactly the same thing. And the problem with what they're showing is that it's centered on the U.S. service sector, the one indispensable thing you can't lose.
The one thing that we can't lose is the U.S. service sector. The U.S. consumer is still in decent enough shape. still seeing a rise in auto loan delinquencies, still
Yes.
seeing a rise in credit card delinquencies. Broadly speaking, though, people are holding it together, at least in the fourth quarter, as we saw for those Amazon earning results. They see a good deal of sales, but it's not necessarily coming from the AWS side. For those that missed it, we did read this off at the top of the hour to start the show, but earnings per share 186 versus 149 expected for Amazon. Their revenue was 187.79 billion versus 187.30 billion expected. The AWS revenues were just a touch softer, and their guidance was weaker. They are expecting sales for the forthcoming quarter, the first quarter, to be between 151 billion and 155.5 billion. According to consensus forecasts afforded by Bloomberg News, we were looking for 158.5 billion. So some weakness. We hit a low of 221.77 here. We have a share price back to 232 after hours. The S&P and the NASDAQ are holding up. Right, this is the highest closing hourly candle that we've seen in the NASDAQ this entire month so far, which we're only 6 days in, so I don't know if that's impressive. Tomorrow morning, Ilya, NFP game plan. Last time, it was a good number. I went out to go get car tires, and I said, good number. I'm going to go pay for these car tires by buying some zero DTE out of the money calls. And then the market didn't treat good news as good news. Is tomorrow a day where if the market sells off on a good headline figure, I can go and pay for those new tires and then the losses from my previous trade?
I think you have to be really careful with essentially interpreting whatever happens in the price action after NFP as related to the substance of NFP versus as related to the passing of NFP and in the clearing of event risk out of the market's way. I don't think the substance is going to matter very much unless you really deviate dramatically. I think what the markets want here ultimately, and what probably helps them, if you want to talk about sort of uplifting risk sentiment, is a mildly weaker number. Because I think what the markets want is maybe some extra hope for lower yields and a final kind of push for Fed policy expectations now for next year, because this year is basically dead in the water at this point. If you don't get that, I think the worst of all possible outcomes for markets is something in line with expectations, because that just defaults them to where they were yesterday, and that's probably a risk-off conclusion. If you get a strong number, I think you're probably in good shape. I think the markets are going to cheer that.
Dylan, we're not going to see you until Monday. Do you have any final closing thoughts as we wind up this week on overtime?
I'm a little nervous about a week's jobs number, and I'm a little nervous about a weak economy. And I'm not that I don't know anything. I'm just saying I'm a little bit, I think it's one thing to tolerate a wild president with a strong economy, and it's a very different thing to deal with a wild president with a weak economy. So I'm a little nervous for evidence of weakness, just because I think it'll be much more dangerous, more risky than we want to deal with. So hopefully we'll get a strong labor market.
With that, overtime is out of time for this Thursday, February 6, 2025. We'll be back on Monday, same time, same place, as always, right after last call, 4 p.m. Eastern, 3 Central. Ilya and I will be back tomorrow for last call. We're hosting that, so be sure to check that out. Of course, after this, because it's an abbreviated version, the prediction trade is coming up next. Myself and Jeff Joseph, we sit down with John Rothschild, a sports handicapper, wrote the book on it, literally. He's working on his third one right now. Let's talk about the Super Bowl. So for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. Good luck trading. See you after the break.
Well, that takes us to the big games. Chris, what are we looking at here?
Eagles +2. Is this a good line for us
I think
right
it's
now?
down to 1.5 now. Is that right?
Oh, it shifted over the last 2 hours.
I think the line's wrong.
The line is wrong.
All you timeless children with your predictions and flashbacks, trying to get ahead. What makes you think I can see you? What makes you think I believe you? Dreams inside my bed. Have you heard the tale? You said that I'm waiting, shot from the past. All the dreams were flying, all the thoughts are flying. You heard something fast.
Welcome to the Prediction Trade. I'm your host, Chris Vecchio. I'm with my co-host, Jeff Joseph. We're back for a brand new edition, a brand new format of the Prediction Trade here in 2025. And we're getting things started with our Super Bowl edition. Jeff, it's good to see you again.
It's good to see you, Chris. It's been a long time since the election. It's good to be back in the saddle with you.
It is good to be back. And before the Super Bowl, we have a very special guest coming in today. But before we get there, let's talk about why we're talking about this particular topic. We see here that sports betting is now legal in 39 states and the District of Columbia. Over the past year, 20% of Americans have placed a sports bet, up from about 12% a year ago. People who are betting on sports are doing it not just for fun. They're trying to make money. 65% of sports bettors say that they're doing it, in fact, to make some money. And among sports bettors, the Super Bowl is the attraction of attractions, Jeff. 79% of sports bettors, according to a recent NerdWallet survey, are saying that they will be betting on the Super Bowl. I'm a Jets fan. You can probably see that little sad, pathetic helmet in the corner here. Quite frankly, I don't really care who wins. Do you have a bet on this year's Super Bowl?
I'll definitely have a bet on this year's Super Bowl. I'm a hack bettor. You know, I'm an avid prediction market wager in the same way that you are an avid options trader. When it comes to sports, for me, it's more entertainment. I've always appreciated the science and the skill of proper sports wagering. To answer your question, I know there's a lot of Kansas City fatigue out there. I would fall into that camp. Since I have no real dog in this hunt, I don't have to check any bias going into this, and that's why I'm really interested in listening to what our guest has to say.
Sure, and before we get to our guest, John Rothschild, who is a legend within the industry, let's talk a little bit about the Super Bowl. Super Bowl 59 is going to be held in New Orleans in a few days' time. The Chiefs, who are 15-2, the AFC champions, are taking on the Philadelphia Eagles, the NFC champions, who went 14-3. Chiefs have a three-peat on the line. This is a dynasty in the making here, so there's a lot riding for Patrick Mahomes, Travis Kelce, among others, Andy Reid, of course, the head coach. But this would also be the second time that the Eagles would have won a championship in the past decade. It's a different team, though, Jeff, when the team won last time. Carson Wentz went down with an injury, so you have Nick Foles step up. He's the MVP of that game, and they beat the New England Patriots 41-33. Jeff, this is a really tough game for me to pick a winner, so I guess I have to be dispassionate when going into the betting odds here.
So what I asked our crack research team at Luckbox to do was to find somebody who's like the insider's insider from a handicapper standpoint, somebody who, you know, really kind of knows this game from the inside. And that's what we found in John Rothschild. He's an interesting guy. First of all, he wrote this book, this book right here, which I'll be referring to, Football Betting Made Easy. I've gone through it this past week, taking a good look at it. In fact, one of the things I like about what he says in his book, in this one chapter, Chapter 14 is angles that work best for the NFL. And he has 25 different plays. Things like when a double-digit favor covers in the first half, take the under in the second half. This has been hitting a little bit more than 65%. Favorites after a big loss cover 62% of the time. And what is so interesting about John when we found him and started investigating him is, unlike most of the charlatans out there in the betting world, he publishes his track record. He has for years. It's all on his website over at precisionhandicapping.com. We'll show his track record too. And he's the first to tell you that when it comes to gambling, you need only a 54% average to beat the house because of the vig and because the way the numbers work. And he publishes his track record in football and horse races. Lifetime record on college and NFL football is 59% against the spread. So he has a auditable lifetime record. He's got a master's degree in statistics, studied behavioral finance and game theory. He's kind of our kind of guy, right? So with that, let's bring on John. I think he might be waiting in the wings out there. And well, welcome, John. It's good to have you on. We've enjoyed the time that we've spent getting to this point with you, and you've been gracious with your time. And what you have in common in your approach is how we approach the financial markets. It's a measured, risk-taking approach. It's not about gut instincts. It's all about the math and all about the numbers. So,
yeah, John, I really appreciate your time. And coming from a family where my brother has worked at FanDuel, now at SportsGrid, I don't get any picks. I don't get any information. So this is a delight. I get to brag to him that I got to speak to the great John Rothschild. So Tell me, you've been in the industry for a long time now. In an era of advanced analytics and big data, what's one old school handicapping principle that you still swear by that may seem counterintuitive for modern bettors?
It's all, everything is a compilation of lots of factors. Only thing I could think of is that football players are basically animate chess pieces. They have circadian rhythms, biological clocks. One thing you might want to look at is if a team plays 3 or 4 times away instead of playing at home like we saw with the Washington Commanders, who I think won their 4th away game last week. After beating Detroit, pretty much didn't have a game left. They're a pretty good team. So travel is important.
John, we focus a lot on certain metrics over here at tastylive. We look at things like volatility, implied volatility, IVR. It's an important metric for us. Is there any significant market efficiency or metric that you've identified in football betting that's maybe part of your secret sauce, or you believe most handicappers are missing or don't value its utility as much as you do?
Yeah, and it's sort of also a way, it's called CLV, which is closing line value. We're just sort of judging how well we're usually doing. Getting good closing line value doesn't mean you're going to win your bet. Certainly gives you a little more confidence. And you want to basically beat the closing line. So, for example, maybe we got the Eagles at +3 and they go off at +1. We got 2 points of value. And there's a better chance that we're going to have better EV, better chance of making money. One thing I'd like to bring up is that there's a lot of buzzwords today. EV, people throw around a lot of things and they don't really know what they're talking about. Closing line value is wonderful. It's not as great later in the week because betting limits open up. Maybe you could bet $10,000 on a Tuesday, $20,000 or $30,000 on a Friday. Your CLV may drop. You'd still like to see that you've got better value, but it's not quite as important later in the week.
If you have positive closing line value going into game day, does that give you an opportunity to increase that wager or no?
You can. It's up to you. It depends on so many factors. I wish I could tell you there was a magic formula. We do lots of research. I am basically what you would call a bottom-up guy. I figure out what side I think I'm going to like. I process information, and then I have a team that go out and place the bets. That's their job.
All right, and you are paid a percentage of your wins, basically. You operate, when you described your business model to me, yeah, it's pretty much like a hedge fund manager. You're taking a percentage of profits essentially for the advice and counsel. Yes.
In what scenario do your gut instincts ever override your statistical analysis?
Never.
Never.
So again, the answer to your question, I don't have a gut stink on anything.
John, what's the most single dangerous psychological trap you see successful handicappers fall into once they start making constant money?
Believing that you're better than you are. I sweat every game like it's my last. If I have a winning streak, I'm always afraid it's going to end. If I have a losing streak, I don't know when my winning streak is going to start. Just don't think you're a better handicapper than you are. Things happen in a game. You know, we saw Buffalo last week. If Buffalo had converted one of their 2-point conversions, and all game scenarios change, they cover.
Is there a long-held handicapping belief you've had that you've recently reversed as a result of new information? Or
yeah, I would just say angles change constantly. You try to stay ahead of the market. They're absorbed by the market, and hopefully they're good for a few years. Then you've got to move on. So there's nothing that I hold that near and dear that I know is going to work.
You mentioned talking about college winning streaks when we were chatting. What's changed there? It's something that I know a lot of gamblers really believe in, college winning streaks. Is that something that you ascribe to?
That's such a great question. Okay, one of the best angles I ever had, which doesn't really work anymore, is that if a college football team, after let's say week 7 or week 8, depending on the scenario, loses its first game or gets taken out of a major playoff spot, or they think they're taken out, they don't cover the next game. The handicapper will say, my gosh, they're going to play harder the following week. That doesn't happen. Now, because that's sort of out there, it's eaten up by the market. And look, the college football and NFL football is maybe next to European soccer, the most efficient betting market out there. Your angles change. We've got to come up with new ones.
What's one type of bet you see sharp money consistently making that the average bettor thinks is crazy or not really worth their time? Walk me through some of the logic behind it.
So a lot of times I would say that might be a negative bet. So maybe if you're saying, I think a draft odd, a team is -1,000 or a player is minus 1,000, there's a pretty good reason why they might be. The betting public likes to see action. They like to see scoring. All of us, we remember big scores. We don't really remember too many big tackles. We remember touchdown passes. We remember Saquon's Barkley's run to start the game last 2 weeks ago.
You're saying that big negative numbers are something that sharp money focuses in on?
The idea is to make a profit. You're not going to get rich overnight. And a lot of our competition, they weren't just fired from NASA.
Yeah, I think that plays well into the behavioral finance equation of the loss theory, that essentially the people worry about losing more than they enjoy winning. So if you're looking at laying 480 to win 100, that doesn't reconcile, I think, with the average gambler. Doesn't want to risk 480 to win 100, regardless of what the probability might be. One of the things you've said in your book is that, it's often when you're seeing football or sports handicappers, they speak to a conviction level. This is a high conviction level wager. This is a low conviction level, or this is a 3-unit bet, not a 2 or 1 unit bet. And in your book, explicitly, you refer to something, in fact, I'll read it right here. It says fixed dollar wagering. This goes against almost every analyst's recommendations. Most assign point values or units to individual bets. Not me. There are no locks or guarantees. One large losing bet can wipe out 3 winning ones. Bottom line is that you, for the most part, assign relatively equal amounts to all of your bets. It reminds us of a tasty philosophy, which is trade small and trade often. So you're not trying to make it all on one wager. You're trying to beat the odds over time, and you've done that with your 59% against the spread, win rate. But is that still the case? Do you treat pretty much every bet?
I mean, on any one weekend, take out the weekend coming up, you have 80 or 90 games to choose from. Pick those 10 games that you like the best. Maybe for some reason you like a game more than another one, and you might want to put a little bit more money on it. But I'm fine with fixed dollar wagering. Again, this isn't something, and everybody needs to know this out there. It's a learned process, and it's involved, and you can make a great living, but it's not going to happen overnight.
Well, and when you talk about things that you shouldn't do, betting among college students has really proliferated as a result of BetMGM and FanDuel and DraftKings apps, and they love parlays, where you clearly, and there should be no surprise to anyone who can do a little bit of math, that parlays are just not worth your investment, parlays and teaser bets. Can you say more about that? Has your thinking changed?
Teasers are okay if you play through a key number, 3, 7, even 10 or 17 in college. So I'm okay with teasers if you hit the right number. Parlay the mess. Math does not usually work.
But Jeff, let's talk about these prop bets. I think we should just start with what's a prop bet for most people. A prop bet or a proprietary bet for the Super Bowl are bets that are made outside of the standard odds for the game, not the spread, the money line, but these are specific game occurrences, team and player performances, as well as happenings during the game itself. Jeff, we have a framework here that we want to talk through with John. We're not going to talk specific bets per se, but let's talk about some of these prop bets that are on the board here for Super Bowl 59.
Analytics do play a much more important part in the Super Bowl with props and games during the rest of the year. So we said before, public likes scoring, big payouts. If you want to do an over, do it now. If you want to do an under, wait.
We're looking at some of these other prop bets here, Jeff. I see total completions by Patrick Mahomes this year. We're talking about a 24.8 average over the last few seasons, somewhere in between 22 to 26 per game. John, what are you thinking about for the total completions here for Mr. America, Patrick Mahomes?
He had 18 against Buffalo. He had 16 against Houston. What side are you going to take?
Fair enough. Rushing
Eagles
attempts
have the better defense than both of those teams.
They do indeed. So the next one for Mahomes would be the number of rushing attempts. He's averaged about 3.86 attempts per game in his career. Do you think that this Eagles defense shuts that down?
Here's where to go the other way. I don't want to call this a gut feeling. It's just my analysis of the game. I think during the season, he might have played a little bit more controlled. I think now it's all out. It's a Super Bowl. It's a three-peat. He ran 11 times last week. He ran 7 times against Houston. The number's now up to 5.5. I would take the over.
All right. Travis Kelce, you gave us that. Averages 5.7 yards in terms of his reception yardage. It looks like, according to Circa's numbers, that 5.5 is going to be the number. What do you think?
I had 6. I don't know if I'm comfortable with 5.5, but I'll tell you why I did like 6. Public money, Is this the only time of the year, the Super Bowl, when public money does affect the odds? They all see Travis Kelce. They see Taylor Swift. I heard a little girl in an interview the other day. Somebody asked her who her favorite football player was. She didn't say Travis Kelce. She said Taylor Swift. So a lot of the money is going to be going on the over. Also, it's a little bit skewed because last week the Eagles played the Commanders. Zach Ertz, a former Eagle tight end, had 11 receptions. It's pulling the number up. Take the under.
Can we take the under on Taylor Swift receptions during the Super Bowl?
Yeah, well, you're going to need negative value on absolute value on that.
Saquon Barkley, 2 rushing touchdowns. This season, he has a career-high 13 rushing TDs in 16 games. Can he hit 2 TDs in the Super Bowl?
Okay, this is the Super Bowl. This isn't the regular season. He averaged 1 a game during the season, 1 a game, 1.1. Look at the over. And that means that he's going to have, it's not the over, he's going to have 2 touchdowns. I think you can get plus 350 on it. Have some fun. Don't bet the mortgage for the car payment. Have some fun with it.
Hicks, the chief safety, will he have over 3.5 tackles this year, 1.35 average tackles per game in his rookie season?
Okay, this one I like a lot. And this one really involves homework. Hicks had 5 tackles in his first 7 games. He had 18 in his last 4. He's a rookie. I think he's out of Washington State. They didn't play him that much in the beginning of the year. He's now playing 80% of his snaps. I believe the number's wrong. I would take over 3.5. That's total tackles.
All right. Well, next you gave us the first turnover will be a fumble. And I was really curious about this. Apparently 30 to 40% of turnovers are fumbles. Less than 3% of passes are intercepted, and less than 1% of run plays end in fumbles being recovered by the defensive team. But you have the first turnover will be a fumble. Obviously, this is a fun bet with a. What's the number look like on this? First of all,
minus 160. Basically, bet $1.60, make $1. Again, that could change. But there have been 17 straight games where Kansas City and Philadelphia cumulatively have not thrown an interception. Now, on the Eagles side, that includes a couple of substitute quarterbacks. It's still 17 games. So I think the odds are a little bit better with these 2 teams, especially after you saw what the Eagles did to Washington last week. They're great at causing fumbles. We're looking to see a fumble before an interception.
So that's interesting. So whereby typically 30 to 40% of turnovers are fumbles, you're saying based on the fact that these quarterbacks just haven't thrown interceptions in heads-up matches, or generally speaking, that the odds of that is lower. That's an interesting bet. I like it. I'm going to look for that.
These are 2 of the most controlled quarterbacks in the NFL.
We're talking about passing here. There's a prop bet up for Ken Gainwell, the Eagles running back. His first reception will be over 4.5 yards. In the notes, you point out that he's averaged 7.3 yards per reception this season. Quite frankly, I don't think much about Ken Gainwell at all, but this is an interesting name to bring up here.
I was surprised he made the team, but he looks good. He's a great backup. He can block a little bit. Again, he's got to have a reception. If not, you lose the bet. In the playoffs, he's averaged 8.3 yards a catch, so that's a no-brainer right now.
Well, Gainwell's a running back. Let's talk about the running game here a little bit. The total rushing attempts by all players in the game right now, at least the lines that I saw most recently, Kansas City was at 26.5 for the game. Philadelphia was at 36.5. That gives you about a 63 rushing attempts total for all players on both sides in the game.
Yeah, so Kansas City has had 26.5 rushing attempts per game, and Philly 36.5. So what does the number look like here?
Well, I think I was talking about total players to rush for the game.
Oh, number of players, I say.
Number of players. And this is where I think we have a good side. And again, I'm not looking at the regular season. I'm looking at the last 3 games that counted, not the last regular season game when starters didn't play. And the average was 9.33 runners per game for the 2 games combined. You get 8 runners right now. I would look at the over. And just so everybody knows, a sack does not count. In college, it does.
You gave us another fun one sounds like a trick play here. It's that Mahomes or Hurts will catch a pass. So I looked at this. There's not a lot of instances. And Mahomes caught a pass in 22. He caught one in 24. He's caught 2 passes in the last 112 games, or his 112 career games. Hurts caught 1 pass in 77 games in his rookie season.
We look at 2 really aggressive coaches who have 2 weeks to work on things. Maybe we see a Philly special, although that wasn't Nick Sirianni. at plus 1250, plus 1300. This will be just fun thing to watch the game. Again, we're not betting the mortgage on this. We're having fun. We're hoping for one of the quarterbacks to catch a pass. And if you're going to give me 13 times my money, I'll take it.
So you had a plus 1250 or plus 1300. You also had the plus 350 with Barkley getting 2 or more rushing TDs. Any other high ROI bets that you're looking at?
I'm pretty obsessive. Anybody wants to email me, go to my site. I'll give you some other ideas.
And of course, John's site is at precisionhandicapping.com. He's also the author of this book, Football Betting Made Easy, which you can find at precisionhandicapping.com as well. Well, that takes us to the big games. Chris, what are we looking at here?
Eagles +2. Is this a good line for us?
I think
right
it's
now?
down to 1.5 now. Is that right?
Oh, it shifted over the last 2 hours.
And I'd tell you a little bit of a pet peeve, something that really bothers me is analysts, they'll pick a side, and they're like early polygenist scientists in the 1900s, they'll cram data into this to make it look like it should work. And you know what? You're going to believe them. But these analysts hit less than 50%. So take that into consideration. Again, remember, public money affects the number, which is actually probably going to go towards Kansas City. So with that being said, I think a lot of people remember 4 turnovers against Washington had against the Eagles. A lot of people know that the Chiefs have a dynasty, but this is probably the best defense Kansas City has faced. I know this has been run through the market a lot, but I'm not real religious, but there's some kind of divine intervention going on with KC. I mean, they just cover every week or win every week. I'm sorry, they don't cover that often. On Philly's side, and you probably know where I'm going right now, Eagles have a tremendous offensive line. Here's something that's really interesting. Do you remember the line last year with San Francisco?
2.5?
They were -1.5. I would say that Kansas City's not quite as good as they were last year, and that the Eagles are better. I think the line's wrong. I like the Eagles.
The line is wrong.
All right, there's our big pick. Likes the Eagles, laying 1.5. Is that where you're looking at? And you'll like the Eagles at a pick up until where?
That's a great question because, this is not really that key a number. Going from 1 to +1 to -1, wherever we stand, especially winning and losing the game, it's not going to end a tie. I think I'm going to stick with my Eagles at +1.5.
Is it going to be a high or low scoring game? The last thing left to cover is the total points in the game. The Eagles have averaged 27 points per game this season. The Chiefs have averaged 22. That comes out to 49. I think that's where the over-under line is right now. In fact, going back to your closing line equation, I think you've seen some closing line value in the drift from what opened to be a 51.5 over. It's come down to 49.5. Is that what you're seeing as well?
I would stick with the under. Again, public money, it's probably going to push that number up. So if you like the under, wait on it.
Well, it's a theme that I recall in your book again, is that you said that generally speaking, the public likes to bet overs and they like to bet favorites. And one of the best long-term strategies is unders and dogs overall. I thought interesting insight.
And again, it's a low-scoring game, maybe compared to the rest of the year. The playoffs have been just a ton of scoring.
Again, in terms of bankroll management, you like to treat most of your, of course, the gimmick wagers like the +1250 and the +350, you wouldn't put those bets on parity with your other bets because they don't need to be, right? Because the payoff is so strong, I would imagine. But
I'm sorry, it's just one game. We're just trying to make some money.
Bet small, bet often. It seems pretty well aligned with how we approach things here. So you'll end up how many prop bets will you advise to your clients for this game?
We might get up to 15. There is no set number. It's what we find has good value, and we take it from there.
And these 10 that we just discussed are among those 15. All right. How long you been at this now?
I guess 22 or 23 years, and I was talked into it. This wasn't something that was on my list of things to do growing up. And also after syndicating racehorses, I thought, gosh, this has got to be so easy. It's a binary choice, one of two teams. It's tougher than picking a horse race.
Oh, that's fantastic. Well, we'll be watching closely. We'll be thinking of you. We're going to make sure that all your picks are included. We'll put some graphics up in the segment as well, so you'll be able to see what John is recommending on his short list for prop bets, and we know his big picks for the game. Chris, what else you want to tell our listeners?
Well, if you want to learn more about John Rothschild, head over to precisionhandicapping.com. He's currently working on his third book. You can also pick up his first book, or at least the last book on football handicapping, which Jeff has shared here on air a few times. But until then, good luck trading the Super Bowl this year. This has been the prediction trade, as always, as we like to say around here. Thanks for tuning in. Always wager responsibly. Believe in your math, master your trade, and join us next time on the prediction trade.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
If you missed the live show, here's our cherry on top weekly recap.
You think I'm not listening over here? I know you call me silly a couple times and stuff like that, but you know, we're idiotic and stuff like that. But I got 2 ears and I can't close them, although I'd like to sometimes. Like my eyes, I can close those, and I do that often while we're on the show. I can't.
Let's go to the next slide, Beth.
I don't close my ears. Take a quick 90 seconds, because your throat's hurting. You're not feeling good today.
No, I feel fine.
Yeah, you look great.
Thank you.
You look great. This is where my ears stay open, but my eyes get closed.
Hey, I want to say gung hei fak choi.
Yeah.
It is Happy Chinese New Year.
It is.
For you today. Yes, that's pretty good, right? My Chinese is pretty good.
That would be pretty good.
Yeah, it's the year of the snake. So I looked this up before the show. You are a tiger.
You bet your sweet boopy I am.
No, it says here the tiger has a mixture of traits and can be aggressive, courageous, candid, and sensitive. Ding, ding, ding. I am a goat, and goats are elegant and creative. Oh my God.
Come on, Dad.
Our new store is about to open. We partnered with Threadless and... We did. We partnered with Threadless. And...
This is a collab. It's just a...
Hats, socks, shirts, pants, sweats.
You should model all the clothes and show as a lookbook.
He doesn't.
What are you talking about? I already am.
No, I know, but on the site.
Yeah, what do you think's in there?
Oh, it's all you? Okay,
yeah, it's just pictures of me.
Oh, beautiful.
Yeah, it's just me in different outfits.
Yeah, we want to put our... the foot one.
The socks, the pants.
How about the thong?
The shirt.
Get the full scoop by checking out the archives at tastylive.com.
All right. Perfect. I would like to buy Park Place.
No.
What?
There is no Park Place in this game.
Yes, there is. I'm looking at it.
No. This is mine.
Take it.
It's mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly, this is the mayor, and I am overturning everything, and I am allowed to buy. Excuse me?
You're in over your cute little head.
Don't patronize me.
You
This
don't
is a
come
board
down
game.
to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads, and what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue, a beautiful car worth 10 times more than your dog who is gone. Cut a deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
It's that time again. The market's in relative standstill here as everybody waits with bated breath for U.S. jobs data. It's only right. It's the first Friday of the month directly in front of us, and this is when the markets get the official report that so much of their thinking about the U.S. economy and that, of course, Fed monetary policy is going to hinge. So, as we consider what is going on here, we, of course, have to take a look at what is expected of the data, and then how it might actually drive markets as we go. So, what we'll do here is break down that here on Macro Money. As ever, I'm Ilya Spivak, head of Global Macro here at tastylive, and then hopefully arrive at some sort of a trade implication at the end of our analysis, because indeed it looks like something of a change is developing in markets, and we're going to try to put our finger on what that is and how this data may well alter what this data does for stocks, for bonds, for currencies. Let's begin here with a grounding in expectations. So 170,000 jobs expected to appear for the month of January. That would be a little bit of down step from the 256,000 in the prior month, but certainly not catastrophically so. We can see the overall setup here is still well within recent ranges. As we take a look at what the labor market has done over recent months, I think we can quite clearly see we've sort of anchored into a range going all the way back to the beginning of last year, where U.S. job creation really hasn't made a meaningful break one way or another. We kind of cooled from the middle of 2021 into this range and have been sort of oscillating without much movement. A similar story expected from the unemployment rate. The monthly reading from last go-round at 4.1% expected to hold steady here. And indeed, if we look at the way that U.S. economic data has tended to perform recently compared with expectations, the argument seems to be toward a slight positive bias on this Citigroup Economic Surprise Index that measures outcomes not in absolute terms, but relative to forecasts and scales them to the volatility that the releases generate when they come out. What we find is 0 is neutral. So this is where expectations and realized results match. We're a little bit above that, so the tendency is gently toward outperformance, but we're very, very close to 0. And so the overall sort of sense here is a tendency to be within striking distance of expectations, relatively close. And indeed, in so much as the ADP report, the private sector estimate of payrolls, isn't usually a very good indicator for what official figures will show, it does give us a preliminary view that suggests relative stability. The number earlier this week came out a little bit better than expected, 183,000 private sector jobs created versus 150,000 that the analysts had on their bingo card. But nevertheless, the overall story, very little changed. 30,000 jobs difference for the size of an economy like the U.S. Not really a huge amount of deviation. And indeed, the general story here, that of relatively stable job creation all through last year at least, is about what you would expect. In fact, you can see here a very similar story on the official reading, even if the aggregate figures are a little bit different. The same thing comes from the Institute of Supply Management's numbers published earlier this week. We got updates on both service sector performance and manufacturing, and we can see here the service sector in particular showing steady employment growth. These numbers in the logic of PMIs, and this is, of course, just the employment component of that survey. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. The takeaway then here is the service sector, which employs the lion's share of workers in the U.S. and accounts for overwhelmingly most of economic output, something on the order of 75% of the economy is services, and even more of employment, close to 80% of employment is services. So that we have stability here tells us a story about the overall labor market, and we can see that that has very much offset the weakness that we'd see in manufacturing, where we can see employment has been contracting up until January, where it actually peaked its head above water again for the first time in a while. Not since early last year, late last year, did we see a little bit of a sliver of positive manufacturing sector growth. And it looks like in January we managed to somewhat arrest the preceding weakness, at least a little bit. So all of this seems to point to a relatively stable labor market, and the likelihood that the numbers that we're going to get out of the official figures probably endorses that view continuing. So, what's there to trade here? As ever, the markets operate in a way where it is the deviation of reality from expectations that drives volatility. That's what actually motivates investors to go and change allocations, to trade this or that differently than they had exposure to it before, when they realize that reality isn't what they thought and they have to go rebalance portfolios accordingly. This seems to say that the labor market is going to be relatively steady. And indeed, to the extent that this data, and really any U.S. economic data, is an input into the Fed policy calculus, that policy calculus has been relatively steady. Consider all of the fireworks we'd see episodically, just even over recent weeks, around the unveiling of DeepSeek's AI model from China that purports to rival U.S. offerings, but at a much lower cost to train comparable models. Consider the here today, gone tomorrow U.S. tariffs saga at the start of this week, where the Trump administration moved to levy tariffs against Canada, Mexico, and China, and within 24 hours, only the Chinese tariffs were left. So the share of macro volatility here and just episodic out of left field event risk has been, let us say, not negligible. But nevertheless, we can see here from Fed policy expectations, we've not gone very far. Markets now baking in 44 basis points in rate cuts for this year. That's almost exactly in line with the Fed's own prognostication from December, 50 basis points expected there. And really the divergences for next year. Markets are at 21 basis points, so not even quite at one cut, although that one cut is pretty close to being baked in, just 4 basis points off. But the Fed had 50. So this is where there is a little bit more of a departure. In cumulative stimulus between this year and next, the markets are at 64 basis points and the Fed is at 100. So there is a non-negligible difference there in sum of close to 2 rate cuts. So perhaps the state of steady numbers here is coming at a time when the expectations for this year are relatively anchored. They've been so impervious to event risk that the markets don't seem to be of a mind to speculate there. And maybe that then puts the spotlight on next year. Because, again, if we take a look at near-term policy expectations, we can see not only have they been remarkably steady recently, they've been remarkably steady since November. This was the Fed's big dovish outing in September here, and we can see by November, as the markets start to reprice expectations to say the Fed's more dovish inclinations don't make much sense when you consider that the U.S. economy by then is heating up after a few months of slowing. Moreover, you have the election pass, and it passes with, obviously, a victory for President Trump, whose economic platform is thought to be generally inflationary, be it tax cuts and deregulation that ostensibly boost growth and thereby drive up inflation. Growth and inflation tend to walk hand in hand. But also the possibility of tariffs and of some sort of a labor market disrupting deportation campaign of migrants that would purport higher taxes on imported goods. That's inflation. And likewise, a higher cost of labor. That, of course, is a more expensive input into almost everything, and so higher end prices. With that, it stops to make sense that the Fed was quite as dovish as they were in September, and by November already the markets have made the switch. We can see here that thereafter, the subsequent meeting in December where the Fed makes the switch official, endorses it with their own forecasts, that's already barely moved from where we were already by November. And indeed, the most recent numbers here, following a Fed policy announcement just earlier this month, almost unchanged. Very steady here still. So already as of November, near-term Fed policy expectations, at least as far as the markets were concerned, seemed fairly well established. Stock markets have seemingly echoed as much. Note that for all of the gapping and the shenanigans with DeepSeek and the tariffs and this and that, what we've found is that since early December, the bellwether S&P 500 has gone basically nowhere. It's been stuck in essentially a 6% range. And while we've seen these sell-offs, this is the DeepSeek sell-off, this is the tariff sell-off earlier this week, while these gaps have closed, or at least tried to close, we've also not exactly shrugged off the bad news, else we'd be rallying. We'd be breaking these highs. But the market still seems somewhat circumspect here. It's not convinced, apparently, because we are still stuck in this range. And maybe the stasis of policy expectations, at least at the near term, has something to say about that. But where interest rates would likely be even more front of mind, that's interestingly on the move. And it's at the long end of the curve. That this is the continuous contract for the 30-year long bond. And what we see here is a significant rebound. And if we were to look at the benchmark 10-year, it's much the same story. Now, in line with relatively steady Fed policy expectations, the 2-year, so the front end of the curve, very steady, not really going very far at all. But interest rates are absolutely on the move at the longer end maturities, and more interestingly still, They are now at the lowest level in 8 weeks. Yields, of course, move inversely of bonds. So when we see this bond rally hit an 8-week high, the flip side of that is an 8-week low on longer end yields. Moreover, the bulk of this move has happened on just 2 days. This one, that's January the 15th, and this one, that's yesterday. This right here is that DeepSeek news that gives us a bit of a pop that we then stop to digest. But it's really this move here and this one that do the heavy lifting. And tellingly, those are both economic data days. The first, the US CPI report, that gives us slightly lower core inflation than expected. We can see here the headline comes in line with expectations, and that's to be expected as we get easing influence on energy, as the rebasing of these energy contributions becomes less negative. We can see core inflation comes up, or headline inflation, comes up a little bit. Core here has been steady, reflecting the conditions of the core services contribution here, which itself has been fairly steady and which has been, of course, the focal point for the Fed. But the aggregate numbers are a little bit softer, 3.2 versus 3.3% expected. So that's one jump in bonds and one lurch lower in yields. And the second come just yesterday with disappointing U.S. PMI data that showed us the slowest U.S. economic growth in 12 months. Worryingly, that came not as you saw a little bit of a perking up in manufacturing, again, coming out of contraction territory and actually giving us a positive result at 51.2, but a slowdown in the service sector, which had been, of course, the main engine powering this strength all of last year. Moreover, even though employment was relatively steady in the parallel ISM PMI numbers, the actual headlines were also weaker in aggregate because of services. Again, a slight beat on manufacturing, but the meat of the economy is services, and here there was a disappointment. Of course, putting this in context by component, yes, indeed, as we saw earlier, employment relatively steady, but the price component as a implied demand gauge lower, and perhaps more worryingly still, new orders significantly lower and approaching standstill. Now, this, of course, is worrying in a much broader sense, because what this implies is that this very state of affairs is starting to show some wear and tear. Now, to see that most inflation here sits in the service sector implies that most of the demand is there, that the abiding driver of the U.S. economy is the service sector. Note, there is virtually nothing comparable on the goods side. That inflation is fractionally negative. So there really is no major growth in goods demand. It seems to all still be in services, and indeed, that's how this slowdown in services gives you the lurch lower in the overall composite. Now, with that, the global aggregate, this is now global PMI, as we can see, looks very much like its U.S. version. Relatively steady from mid last year until we get this lurch lower. And that really speaks to just how sensitive overall global growth is to this single point of failure, the U.S. service sector. And that, of course, is because global growth primarily is made up of just three economies: the U.S., the Eurozone, and China. That's 58% of global GDP. The remaining 42% are mainly vendors to the former three. Think Canada and Mexico, appropriately enough, for the U.S., Central and Eastern Europe, Nordic Europe for the Eurozone, commodity producers in Asia, in Latin America, in Africa as well for China. So it's only right that global aggregates start to break down as the U.S. service sector breaks down when we consider that since the middle of last year, it's been the U.S. shouldering all of the burden on growth. These are composite PMIs that we just got updated this week, showing what happened with overall economic activity growth in China and the euro area over the same period. And now in January, we can see for China, it's slowdown. For the euro area, it's slowdown. And they've only just barely managed to return to growth here, only fractionally at or above 50 here. But the U.S., that's where the strength has been. That has been the global economy. And it's this lurch here, most recently, that then powers what we see here. Things are steady, and then down we go. What does all of this mean in aggregate? Well, if the bond market is willing to do this, while Fed policy expectations remain relatively steady, as we see here, then the story really isn't about what we are going to get this year. What that is seems pretty well anchored in place at this point. And that the bond market is doing these things around slightly soft-footed economic data at first and meaningfully soft-footed economic data yesterday next, all that seems to suggest that what is emerging here is more of a cyclical concern, a sign that maybe the U.S. economy is starting to cool finally. And while that may not alter Fed policy expectations immediately, it may very well start to alter the pricing for next year where, as we've just mentioned, the markets are lighter than the Fed. The Fed is at 50 basis points. The markets have only baked in 21. What does all this mean for the jobs report? Well, if the tendency is for this to come out broadly in line with expectations, then the report might be more impactful in its passing than in its substance. If we get a number or a set of numbers that's relatively close to expectations, as we might expect looking at this, then we are looking at a situation that's more of a roadblock overcome than anything that ought to alter the course of sentiment. And then the markets are free to do that which they have been doing, near-term Fed policy expectations notwithstanding. That, of course, is this. So once the numbers pass, it may very well be that bonds just continue to move higher because a roadblock has been pushed out of their way. Moreover, the stasis in stock markets may start to give way on the downside if, in fact, what the markets are starting to position themselves for is cyclical cooling. And of course, whether that breaks the larger range here from early December and finally gives these markets some directional conviction after now almost 2.5 months idling, having broken the uptrend from August, that we'll have to see. And that's macro money for today. We're here Monday through Thursday, right after Overtime, show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go there from. I'm likewise on with Chris for Futures Power Hour Mondays and Fridays. That's tomorrow right after the jobs data, and we'll break it down. I am likewise on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back next week. Take care.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Know someone who needs a better broker? For 1 month only, earn $500 for each qualified person you refer to Tasty Trade. See how it pays to have friends? Terms and conditions apply. Tasty Trade.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What is going on, everybody, and welcome back to the Bad Taste segment. We got Gus and I today. We're going to do a little tour to market, break down some of these after-hours movers for earnings. We got things like Amazon we'll check out, and then get into some of the fun games that we do towards the end. But before we get into that, Gus, my guy, how we doing today?
Man, I'm doing well. It was a good day of trading. It was one of these days where if you basically just go long anything, it'll work out. I caught a nice gap on Eli Lilly this morning. Picked up added a little bit of Ethereum. Crypto lacking a little bit. Feel like that's going to come back. So yeah, I'm happy. It's been a good day.
What are your no financials? What are your thoughts on XRP?
XRP, man, I used to be really, really high on Ripple. I actually probably still have a few $100s of it laying around in a Coinbase somewhere. And it's done well. I was buying back in like 2019, 2020. I'm admittedly not well versed enough on crypto to really have a justified opinion on how it fits into the wider space and the blockchain and all that good stuff. But from a purely financial stock sort of perspective, I'm a fan.
I got you. I love it. Well, we can't not talk about what we're about to bring up next. Over or under on the Chiefs? Are you an Eagles fan right now? Is what we all want to know in chat, Gus.
Yes, of course. I'm a Chiefs bettor and I am an Eagles fan at the same time. I'm not going to fade Mahomes in this spot with all the narratives.
You're not going to fade the refs.
Well, yeah, you got to fade Mahomes, you got to fade the refs, you got to fade Taylor Swift. It's a lot of people to fade. I'll tell you where my money is on Travis Kelce proposing if they win this game. I think that's what's going to happen.
Really?
Yeah.
Is there a poly market for that setup?
Oh, there might be. That's a good thought.
Yeah, let us know, because if we have an extra few minutes, maybe we can just hop into poly market. Just also check out what the standings is looking like for the Chiefs, and they do have it.
Yeah, 5% chance is what the market has it at. It's been as high as like 20.
Okay, if you don't mind leaving that up, and then we can get into it here in a minute when we have a few minutes. I'm curious to see what that's saying. But Lone, what's going on? Lone says he's sick and tired of the BS with Swift. Well, don't get too tired yet, because we still got a little bit more coming, especially this Sunday with the Super Bowl. There's no way she's not going to be in some ads, first of all. And then when you're watching the game, we're going to always get those shots of her up in there. So, Lone, you got some more Swift to digest. But anyways, what's been going on in the market? We got Amazon earnings after the bell today. And I mean, as you can see right away, very volatile to the downside, upside. I remember I was watching this live. It's kind of funny. Sometimes you'll just be sitting at the computer and you have the chart up, and then you just see like a 50-point drop on one of the underlines. You're like, oh yeah, I forget there's earnings. But I did say, I think last year I wasn't going to be doing too much earnings. It was kind of one of my New Year's resolutions along with Julie. It's like, what? Earnings, we'll put that off to the side. We'll watch it from the sidelines. But this year, Dr. Jim has gotten me into a couple earnings, Gus, and they both went in my favor, which was last week, Microsoft and Meta. So I was like, you know what, Dr. Jim, I like statistics, and so far we're 2 for 2 on the year, so I'm going to go ahead and get into Amazon. We did an expected move butterfly in Amazon to the long side. And as you can see how that's playing out, not too hot right now. So we'll see how the market opens up tomorrow. Other than that, bro, I have that Amazon position. I have the SPY position. I sold a 43 days till expiration out of the money SPY call yesterday, I believe I put it on. That's down a little bit on the day today. We had a little bit of a rally today, especially into the close. Did that one just to express my opinion in a longer term duration. And then I also have the QQQ position on. So this one's looking like an iron condor right now. I originally sold the call spread to the upside. I sold the call spread to get some short delta on, and then we had sold off pretty significantly the next day. So then I legged into the iron condor, sold the put spread. So right now, we're up a little bit on it. I guess, I could have taken off the call spread when we had really sold off, because again, this one expires by the end of the week. But instead, I decided to leg into the iron condor. So far, if hopefully we can get a sell-off tomorrow or some type of downwards move, and then I can profit on both sides of those trades. But if not, I think the out of the money calls, or the out of the money put spread that I sold is going to finance, a little bit of that call spread that I sold, because I might take a hit on that that side of things. But other than that, that's what I got in here. We have Amazon. After the bell, again, I sold the 250 strikes, bought the 240, and then bought the 260. I've never been the biggest fan of butterflies, but Dr. Jim always nudges me to apply some of those butterflies whenever we're trading around earnings. But that's all the action I got going on over here, brother. I mean, I know we have Lulu you had mentioned as well, but is there anything else that's kind of been top of mind, or any you got any thoughts on any of these positions, or where are you at right now?
Yeah, Andrew in chat saying Dr. Jim changed his mind on Amazon today and put a bearish butterfly on. So you gotta give him some grief that he didn't say anything to you.
This man baited me in there. Yeah, he probably sold the butterfly that I bought. All right.
He probably did. Yeah, I can attest. A lot of people around the office were very high on Amazon today. Nick as well. I know he was none too pleased on his way out the door. I like your QQQ, and I think that's a great story and a great lesson in position management and being able to take some risk off. That's smart. I don't have anything too crazy going on today. Christopher Vecchio got me in on this IQV. I don't even know if he realizes he did it. It's just trickled down through the chain of command that I've wound up on this IQV. So what's up?
What's going on over here?
IQV, it's I really can't. Vecchio could do a much better job of explaining it. Essentially, he thinks that this is the next big thing in AI. Is where we're
AI related.
IQV. I don't mean to speak for the man. I would let him defend himself on that one, because, like I said, it's a game of telephone for this to even get to me. But I am liking this IQV. I picked up 10 shares yesterday. Just a very normal, very brain dead play. Just grab some shares, but that's paying off well for me.
Yesterday, because we had pretty big gap up overnight. So
Yeah, yesterday. So that's paid me well today. And then I also caught Eli Lilly. There was a nice gap that formed there this morning after earnings. It felt oversold, and so I grabbed some of that like right before there's a big candle on the 1 hour. But took a gap down after earnings. High on Eli Lilly in general as well. I'm a major bull on all of these pharmaceutical companies with the weight loss drugs. I think that these weight loss drugs are going to continue to rise in prominence. America is only getting fatter. Is my line of logic. So
hey, you're from Texas. Bigger is better.
Yeah. Everything's bigger in Texas. Ask Charles Barkley about San Antonio. You know.
Hey, in terms of, you ever think the weight loss supplements or whatever it has to do with your health, I don't think that industry is ever going to go away, huh? I feel like there's always something in each decade where it's very attractive that's in relation to weight loss, the way you look, and just overall nutrition. So it kind of just seems like that's always going to be one of those industries that's always going to make some type of underlying pop off. But
for sure, and the efficacy of these things is only moving in the right direction as well. So I'm high on it. Legalize steroids. Let's get that going.
As long as it's
legalized trend, I'm buying that stock.
Legalized trend. You ever has never mind.
I haven't. If that was your question, I have some friends at the gym who are questionable, but I have not.
Yeah. Look, I'm not going to take that. I think I'm going to stay natty. I'm going to stay natty, but man, it would be nice to.
Oh, it's tempting sometimes for sure. Especially, I'm well past all the newbie gains and everything now. It's really hard to gain a pound of muscle. So, I would. Some stimulants would be great.
No, I hear you completely on that. Other than that, the volatility index, really not too much of a change heading into this year. I mean, it's kind of been the same story with volatility, but if I can type this in correctly, it's kind of been the same story. We'll see whenever we get any type of significant pullback in the market, but it even just seems like any type of, the gap down over the weekend, whenever there was some of the tariff talk originally, I think that occurred on Saturday, and then it had the market gap down opening into Monday. We saw a little bit of a spike in volatility, but really nothing too significant. Maybe I know we have the 30-day pause. Maybe when things come to fruition with that, and if those do really materialize, maybe we actually get some type of expansion in volatility. But until then, it's kind of been the same story since the beginning of this year. So just been keeping an eye on that. I know IWM is another one I'm going to be keeping an eye on as we head into the rest of the year. Volatility and implied volatility is just a little bit more attractive on IWM. I'm really such a QQQ SPY kind of guy. Like, those are my ETFs. Those are the indices I really like to focus on. But the premium is attractive in IWM. So I'm going to keep an eye on that. But other than that, I know we can check out oil. quickly, pretty big sell-off in oil. Oil is one of those very sporadic kind of products. I don't know if oil is one that you like to get into at all, but I haven't taken part in oil, excuse me, in some time. But
I don't do commodities in general, and highest on that list is oil. Oil is it's a whole scary world that I do not engage with. Oil and natural gas both. I respect you.
So
If you're a natural gas trader out there, I respect you because holy cow.
No, 100%. I know sometimes when I did get involved with oil, I think one of the last times I was really actively trading oil might have been around the time when, excuse me, when a barrel of oil went negative. So it's like, of course, our experience trading some of these products was whenever we had some anomalies within that specific sector or market.
I tried to convince my friends to buy a pallet of oil barrels. They wouldn't listen to me.
Bro, imagine though, oil was dumping around zero. Oh, I know. Let's just store this oil in our crib. But imagine
in the garage. This little crew in the garage never hurt nobody.
Never hurt nobody. Imagine oil selling off around $1, going to zero, and then I could just imagine the margin calls that some people might have had whenever oil did go to below zero. I mean, that's something that would have caught me off guard, and it's one of those things I think I'm gonna have to learn from other people's mistakes, because I could see myself seeing oil going down near $0 a barrel and absolutely oversizing on that, not expecting oil or barrels of oil to go negative. But that's one thing that's always kind of replayed in my mind.
Well, yeah, you certainly as a trader are wired to think that if you're playing things to the upside, that there is contained downside risk. So yeah, all of a sudden when something goes completely negative, that would throw me off too.
Yeah, no, completely. Other than that though, brother, that's pretty much what's been going on in the market. We have Amazon earnings. We can quickly just check to see which other earnings we can expect coming up, and then we can get into our Connect trade. Have you played that one before?
I haven't, no.
It's actually pretty fun. So I know you're familiar with Tradle.
Yes. It's like Connections. I got a brief look at it before we start.
Oh, what is Connections? Maybe I wasn't. Yeah, go ahead.
Oh yeah, Connections. It's one of the New York Times games. People are big into those. They I think they started it. I mean, the concept has been around for a while. But it's you get 16 things that are randomly assorted, and you have to make groups of 4.
And is it about specific countries as well? We might be talking about the same thing.
No, it can be anything in the world, and they try to get you. Like they might throw crimson in there, and then there's also 3 other cells that say red and pink and fuchsia, and you think that it's shades of red, but then crimson actually goes with football teams or something like that. It's meant to confuse you.
No, makes sense. We'll hop into that here in a moment. Just looking at Rivian before we do that. I've been keeping an eye on things like Tesla, GM, Ford Motors. Just again, if the tariff talk materializes, I know we get a lot of automotive parts and things of the sort from Canada. So been looking at some of these underlyings and sectors and industries that might be affected whenever those go into place. But lastly, before we do shift gears, any thoughts on Rivian? I know, again, Rivian's one of those EV companies where I see a lot more of their vehicles around, but I haven't been keeping up too much with Rivian. Is that something that's actually going to be able to compete in the EV market, or is it just the talk of the town?
It's looking like it. I certainly was in the camp of just thinking it was this trendy stock there for a little while that might not take off. Like
that's what it felt like.
Nikola, something like that, which of course that ended in scandal. But I didn't necessarily think that. But I am starting to be a buyer. I don't hold any Rivian myself. Obviously, Tesla is still just so dominant in that space. But like you said, you notice. I mean, I'm seeing Rivians pop up left and right. I don't even think a thing of it or point them out when I see them anymore. And there was a time when it was a unique thing. They're super luxurious, and I think that Tesla is going to. They are expensive, and I think that Tesla is taking the angle of trying to be the Ford of electric vehicles. First to market, very affordable to the average consumer, all that good stuff. And so when you talk about Rivian, I feel like there's a space in the market for that, especially as Tesla's production ups and they become cheaper and cheaper for people to buy. I think luxury EVs are wide open, and I think Rivian's here to take it.
Yeah, no, that's a great point. I mean, if you're a believer in Rivian, it's an absolute steal right now. Hey, just my opinion, but it's been getting absolutely beaten down over the past few years. But other than that, we can go ahead and shift gears here. I believe it is Connect. Let me know if that looks good on your end.
All good here.
Connect trade. So this is not what you were previously speaking about a moment ago.
No, it's not, but it is. It looks, it's conceptually the same.
Okay. Awesome. If anybody is new to this, it is where we find groups of 4 products that where they share something in common. And it'll give us a little bit of a hint if we paired one correctly and if we need to pair another one, if we're missing one or if we're missing 2. So if you're familiar with this segment, you know exactly what we're about to get into. But do we have any we want to start off with, Gus? Any of these kind of catching your eye right off the bat? We got... okay.
Well, I don't know. There is really nothing super jumping out to me. I want to start with Chile, but I don't see anything that like jumps out to me as being distinctly Chilean. I was gonna say mollusks, but we have North Mariana Islands, which is kind of a wild card in here.
Right.
I'm agreeing with the pairing you got going on here.
Particle board, recovery paper, right? Kind of tomato a little bit.
Sure, yeah. I feel like we need to just throw in a guess and try to get some information here.
Otherwise, containers. We'll go. Okay, 2 more. What kind of relates? We'll go. You know what? We'll go mollusks just cause.
Sure. So throw a wild card in there.
Yeah, we'll just go ahead and do that, and then
we can go. Want to go nitrites and nitrates?
Yeah, let's do it. That I just got PTSD from.
Yeah, I did too.
Don't say that out loud.
I saw that and I had to. My eyes darted all over the place. I was like, wait. Okay.
All right. So we have particle board. That's in its own category, so it's not with recovered paper. But at least we know that we have recovered paper and mollusks go together. I would have not guessed that one. And then we have nitrites, nitrites and nitrates, and that is within its own category as well. So we have recovered paper and mollusks. We can choose a new 4 and kind of go from there if we want to do something like that to be able to pair these up. We could,
wider data.
Or unless we want to do recovered paper or mollusks.
No, I agree. I think, especially because it kind of tells us the groupings. Yeah, we might as well just try to get more data.
Okay.
All right. Let's try fabrics and plant foliage. And
fabrics.
Yeah, the pile fabric.
Okay.
And then
let's see. There we go.
And if we're doing the plant foliage, let's throw the fertilizers in there, I think.
Fertilizers. Where is fertilizer? Over here. There we go.
Yeah.
Recovered paper. Is that what you had said?
No, I said the plant foliage. It's
on the
left of them there.
There we go. We got 3 here. Throw 1 more in there.
I don't know. I feel like nitrites go with fertilizer. Not really a big farm guy. Somebody in the comments correct me if I'm wrong on that.
Not a big farm. You gotta be. You're from Texas.
I know the farm people. I am not.
I know of the farm people. Where is that?
The nitrates and nitrites on the right.
Oh, there you go. We'll just group it in there.
See if we can get somewhere here.
Awesome. All right, so we pretty much paired not a single one on that one. So we got pile fabric. That goes with recovered paper and mollusks. Potassic fertilizers, plant foliage, nitrites, and nitrates are also in its own category as well.
Okay, so we got 3 yellows.
We have 3 yellows, 2 blues. Is that green? I'm colorblind. I think that's green though.
It is green, yeah. I don't even know what country the yellow is. Anybody have any ideas? Pile fabric, recovered paper, mollusks, how those could possibly go together?
Honestly, do we even need to know the country?
Well, I mean, you don't, but like it would maybe help try to figure out the 4th if I could establish which one that was.
Pile fabric. Oh, not that one. Recovered paper, piled fabric, and mollusks. We haven't done iron gas containers. We haven't done beer, rapeseed oil, gravel and crushed stone, carbonates. Carbonates and nitrates got to go together.
You would think.
That's what I would think. Let's
go for those 2. Throw paint in there. The other paints on the left.
Other paints. What else would go with paints? We could do rapeseed oil, halogens.
Sure, either one.
Go either one of those. Go here, see what we get. So that's green. So we're missing 1 out of the green. So we were pretty spot on there.
Yeah,
nitrates, carbonates.
Okay, are there 4 we haven't done? We haven't done whey, molybdenum.
Oh, we only have 3 lives left. Okay, makes sense.
All right.
We'll go.
Should we try 4 that we haven't tried, or should we try to play this game?
We should do 4 we haven't tried. You're completely right.
All right, let's go whey and milk products. The top left, or I tried to pronounce it once.
Potassic?
No, the top left. What is that?
Oh,
molybdenum or?
Yeah, no, that's all you. That's all you.
Yeah. My apologies to the audience for having to listen to me say that.
We haven't done you.
And then gravel. We haven't done gravel.
No. All right, this will help us for the next 2.
Surely.
Yeah.
Okay, we got 3 blues. We have all 4 reds.
We have all 4 reds.
Yeah, beer, gravel, other plants, or other paints, rather, plant foliage.
And plant foliage.
Second row, 3 up.
Wow, that was a mission to get that one row. Particle board. Let's go blue.
I like blue, yeah.
Particle board, potassic fertilizers, and then milk. This is tough. Yeah, this is a tough one.
The fertilizers and the milk are giving fields. You got farmland, right. You got fertilizers, you got cows. So I see the vision. I lean Belarus or maybe Chile. Maybe the oil. That's something to grow. Maybe.
Recovered. Oh, rapeseed oil. We could do that one. That one's a good one because we haven't.
Have we tried it yet?
We haven't even. I don't believe we've tried. I'm feeling good about this, so we're gonna go ahead and send it. There we go.
Hey.
There we go. There we go. All right, we'll go.
We got yellows going.
Paper. Yeah, let's knock this out.
Mollusks and pile fabric. And then what goes with these?
It's got to be halogens. If we haven't done halogens yet, I don't think we've clicked on halogens.
I thought we. Oh, maybe we didn't.
It's either halogens or.
Halogens is green.
Oh, okay, it's green. What about iron gas containers?
I don't think we've done iron gas containers.
It may be this.
I think because we know that halogens go with the nitrates. Have we tried the carbonates? We have. Those are green also. Yeah, I'm liking this.
Iron gas containers. Full send?
Yep.
Any objections?
I like it.
All in favor? All right.
Yeah, anybody?
Uh-oh. Oh, there. I didn't click. I didn't click it. I thought I clicked submit. I was waiting to see if we got our. Never mind. There we go. There we go. Easy work.
Hey.
There we go. Buzz the meter at the bell.
All right.
There we go. Other than that, brother, we'll see what we get heading into tomorrow. I think tomorrow, this morning we had initial jobless claims, but there's really not too many significant red folder news top of mind. I'm just going to be looking out for a lot of these earnings. Yeah, we got wrecked. Sorry.
We have the Trump administration back and the volatility that comes with it. So all of a sudden you can just any day in the middle of the day, all of a sudden have some giant catalyst.
On the extra monitor, I make sure I have a news feed going 24/7 nowadays, just in case, because things are turning on a dime. So
he'll hop on that podium anytime and just change the whole landscape.
The entire sentiment of the market. But no, that's gonna pretty much do it for today's Bad Taste segment. Is there anything else you wanna leave off on, Gus?
No additions. Always pleasure streaming with you. And for fans of the segment, I'll be around a lot more moving forward, it looks like.
Absolutely. So that's gonna pretty much wrap it up today. Thanks for taking the time to hang out with us today. We'll see what we get in the market. We'll manage these positions as we should throughout the rest of the week. We'll see how Amazon ends up by morning. Things can change, but I will have those trades posted on the trader page, and we'll see how those kind of turn out. Great seeing you guys, and we'll catch you guys next time. Peace.
Everyone have a great rest of your day.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
So, Venmo is an app that is free, and you can send money to people who also have a Venmo account. So you downloaded Venmo.
Because I need Venmo.
For what?
So, like, when you go, can I have $5 or $10?
I never ask for $5.
When you ask for $20, sometimes I don't have the cash.
Okay.
I only have hundreds.
Oh. So one thing you noticed with Venmo, when you downloaded the app, was that you could see what other people were sending other people.
Why does
$10.
anybody want to see what anybody else is doing?
It's just like creeping, like Facebook creeping or something.
I know, but
I don't know.
people like this?
You do, clearly. So right now you owe me $10. And I know you won't remember, but we made a bet about solitaire where I said, you don't know how to play solitaire. And then you showed
and I said,
me.
I know how to play.
You said you did.
Yeah, and I
then
still do.
Then you showed me that you really do not know how. So you owe me $10.
Right, so how would I, if I
How
want
would
to
you
send you
send
$10?
me money? Well, you got to add money to it. Is a thing you got to do. You got to link it to your debit card.
Lindsay Grotta.
Yay! And you want to pay me? You can put in the amount you want to pay me, or you can request money too.
I'm going to request money from you.
Okay.
Because I am a nice person.
$2?
I'm testing.
That's a little insulty. Then you can click pay.
Pay.
There you go. You paid Lindsay Grotta because I am a nice person. Tom paid you because I'm a nice person. $2.
I like it. I'm in.
What do you think you'll use it for? Do you think
I don't
you'll
know.
use it?
Probably for you.
For me. Woohoo!
Sup?
What's up?
Dope.
Dope. Have you ever heard someone say, it's Gucci?
It's Gucci.
Yeah.
None of my friends.
Nah, it's Gucci. It's Gucci.
It's cool.
Yeah, like, oh, it's all right, man. It's all good.
Okay, that
Like,
makes
it's all
sense.
good.
It's Gucci.
It's Gucci. Yo, B.
Yeah.
You ever have someone say it's Gucci?
Yeah.
Yeah?
Yeah, it's Gucci. I'll never use that term, but it's okay. Now I know what it means.
You won't use it.
No.
Do you have a song that you put on that you like? You groove to, you jam to?
No, not really.
But do you ever hear a song and you're like, oh, this song slaps?
No, I never say that. This song slaps.
Yeah, I
What does
came up
that
with
mean?
that one. Me and Mike Butler say that now.
This song slaps.
Yeah, song slaps.
Never heard it.
Right. You've got to know it's lit.
It's lit.
The market's in your favor.
It's lit. Yeah, it's going good.
Yeah, it's lit.
Fire?
Yeah, did you ever have someone say fire?
I don't know what it means.
Oh, those cheesesteak sandwiches we had for lunch were fire. Yeah, a word maybe I wouldn't know.
Yeah.
That old people use.
I was cruising down the street, but I got to Kembade, so I had to make a right-hand turn.
You got what?
To Kembade.
What does that mean?
Uh-huh. So I got you.
You got me on that one for sure.
He was a basketball player, used to block a lot of shots. He blocks them, so you get the Kimbe. So now you learned one.
Learned one? Yeah, they're going to be.
You learned one.
Here's a new word for you. Learned.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade. Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I
well,
wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Oh, yeah, it is Thursday, February 6th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, a little podcast, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And good God, Miss Molly, good golly, Miss Molly, are there a lot of incentives and a lot of people trying to govern the world. So we will sift through it all here in just a bit. But before we do, we should say what's up to the people. Shout out to everybody watching on tastylive.com, as well as Tasty Trade desktop and mobile applications. But if you want to be part of this crew over here, this screen name and comments, both appropriate and otherwise, there's only one place to do it, and that's on the evil Google YouTubes. So head on over there on your interwebs. And find the Tasty Live channel, jump in the chat, and move those phalanges and metacarpals. Why? Because the more active you are in chat, the more they're going to put this 12-hour live stream in front of people. In front of people. I don't know. I don't know if it gets the premium placement in the Google algorithm. 12-hour blocks of streams. But it will... we'll spoof the Google algorithm into putting this in front of as many people as possible. Speaking of the people, we should say what's up to the people. What's up, chat? Are you there? I think mine's disconnected probably. What's going on, everybody out there? As soon as your names pop up, I'll start shouting you out. There you are. I knew you were in here. I don't know why it does that sometimes. Google. What's up, Lone? Andrew, Todd, Brian Watson. Brian Watson, let me shout you out, my friend, is the GOAT when it comes to tags. I'm telling you should graduate from my stream, man. You should be over on Joe Rogan somewhere doing the timestamps because you are incredible. Catan, what's going on? Jared. Oh, so many. Absolute beginner. What's up, son? What's up? Weird ass market. Amen to that. Amen to that, brother. Lucas, what's going on? What's up, everybody? Y'all have a Trump there in Singapore? Not really, man. They just Singapore's what, 60 some years in? You know, it's a baby. It's a teeny tiny baby. And for most of that, it was run by one person who just passed away. I think when I visited the first time in 2015, he passed away. So basically their version of George Washington led the country for a really long time. And they are on, what, the second or third leader since then? Third. And I don't know if I don't know if it's like a Trump situation. It's a democratic, kind of. It's an interesting system. I don't really know how to explain it. It's an interesting system, nonetheless. What's up, baby? What happened to LNG today? I'll take a look at that in just a little bit. It was getting punched. What's going on, everybody? I was trying to, it's the same day for me. No, it's a different day for me, same day for you. I was on this morning with Tom Sosnoff for the morning show. Tony's out doing his thing on a well-deserved vacation, so I had the extreme pleasure of being able to join Tom this morning, and I thought they were trading heavy for most of the day. I think I was right and wrong, I suppose. The S&P 500 traded or finished in positive territory, up 0.33%. The NASDAQ up 0.5%, the outperformer on the day. A little pump fake this morning on the Russell outperforming the NASDAQ, or basically outperforming other majors. The Dow Jones, guess what, everybody? 30 basis points. 28 basis points if we're being specific on the low side. I feel like we're in a simulation. I also don't know what's up with my pattern recognition. Because am I crazy for picking that out? Are we not moving exactly 30 basis points in the Dow 95% of all sessions? That might not be, maybe 85. The Russell down 0.25% as well. So not a great day for the Dow, not a great day for the Russell. The NASDAQ did outperform. And as Scott Sheridan was on going through the top 10 or 15 symbols going through the system this morning, as he was spitting them out, I was typing them in one by one. And all the tech names he was mentioning, they were all positive on the day. And so some part of the back of my brain is going, uh-oh. If you're playing for a rollover, when all the constituents, some of the major constituents were positive, but the index itself, given the way it's jiggered, wasn't necessarily exhibiting the strength. It's only a matter of time before it catches up most of the time. And it did. The NASDAQ outperformed 0.5%. So I think I was wrong. I thought we would end emphatically negative. They looked heavy. Why did they look heavy, in my personal opinion? Just because of the way the dollar was trading. Volatility was muted, so that wasn't really what I thought. I thought we had the chance to get a little bit of an uptick in vol, but it didn't happen. Nobody cared. Brian, you're a good man. Enjoy the Tom show, the Victor and Tom show this morning. That's the Tom show with Victor as a lowly guest host, but it was fun. Super low volume the past couple of days? Huh. All right. I'm not sure how to do anything about that, but I'll try to talk louder if I can. But let's keep cruising. Vol at 1550. I just don't get it. To me, that is just dry tinder waiting to explode higher. Or there isn't a fear in the world in the marketplace, and people are making a big deal. The media's making a big deal. I'm making a big deal out of existing risks in the marketplace, and I need to get on board. Because the market has, I've always made this case that the VIX is sort of like this diffuser. Like when the market knows not what to do, with information, VIX goes up. When the market can figure out what to do with a risk, it will transfer that risk or unknown into the correct price of an asset or set of assets. So I'll give you an example. If the market doesn't know what to do with something, VIX explodes, and then over the next couple of days, gold goes higher, maybe interest rates go higher or lower, maybe some particular sector gets discounted, maybe some particular country starts to trade at a premium or region. I've long seen sort of the VIX as sort of this. One of the reasons for its mean reversion is you get the initial reaction in VIX because people run for protection and premium to protect their positions, and they get the opportunity to think through price, to think through second, third order effects, and then they appropriately discount the price of assets, and therefore perhaps the need for protection is muted a bit, or you can monetize your hedges, things of this nature. So I kind of see it that way. And I think while there may be risks in the world, there isn't necessarily a need in some ways. And that's sort of I don't want to say it like that's it. It's what it is, because it's not mathematically, that's not what it is. But I think it's like sort of a way of thinking about it for people that aren't as familiar with VIX, or why would we be low in an environment where there are elevated risks. But I still think, I just don't know that I'm getting paid the appropriate amount to sell out of the money risk. And I know a lot of people here are going to disagree with me, and you probably should, because if you're playing that game, you have to play it consistently. You know what I mean? It's like the rules in blackjack. As soon as you start going away from optimal play, you're probably you're giving edge to the house. But as long as you're staying as optimal as possible, you're giving very little edge to the house. And I think for a lot of people who are selling vol here, you got to be mechanical about what you're doing. I'm not that guy. I trade a little bit differently, for better or for worse. And whether that level of discretion is good or bad, I don't know. Time will tell. I just don't think I'm getting paid. I don't think I'm getting paid to come in here and sell S&P puts with at 6,100 and 15 vol. Call me crazy. So that's not the game I'm going to play. But here's what's going to happen. All you guys that are playing mechanical are going to have a terrific spring and summer. And then I'm going to come in here in the summer, and the show's going to be, oh, hey, welcome, everybody. Can you believe vol's at 12? Statistically, there's a higher probability of that happening. But I don't know. Still, I can't get over the fact that vol at 15 seems cheap. And even if I was going to play an up market, I'd probably play it differently. But that's my style. Contract volume, not the mic. Thank you very much. Okay, that makes a lot more sense. I'll stop screaming into the microphone now. And yeah, I agree. Volume. It's like, where'd everybody go? I guess there's some places in Asia. China's on holiday, right? Are they back? I don't think they're back yet. So I suppose there's less like vol through Asian hours, which sort of probably has this cascading effect. Just need to find a guy named Jerry so you can have a Tom and Jerry show. Zing. Is that even a thing anymore, Tom and Jerry? I'm sure there was probably some reason to boycott that show and take it off the air. It was 4:20 exactly, 4 minutes in Denver. Was it? I can tell. I know some part about your lifestyle, Prince Caspian, and I wish I could partake with you. That's one of the tough parts about being in Singapore. It is a beautiful country filled with beautiful people and safe, orderly city, and efficient government. But there is one glaring downside. When you get on the plane, not that I would ever do this. I don't sell drugs. I just kind of participate in the miracle that is Earth's herbal remedies. But when you get off the plane to land in Singapore, they take the liberty of notifying you that the penalty for getting caught in Singapore for trying to sell or smuggle or distribute any kind of controlled substance is instant death penalty. And it's really funny to look around a plane when they make that announcement and you can tell who's going to Singapore for the first time. Because hearing that out loud, sort of kind of a wild experience. And so you just kind of look at the people's faces and you can tell who's hearing this for the first time. It's kind of funny. Disneyland with the death penalty. Exactly. Singaporean parliamentarians are very well paid too, I heard. Yeah, the ministers all make $1 million plus salaries, if I'm not mistaken. And it's for a reason. I think Lee Kuan Yew, who is that George Washington figure, effectively wanted to create a structure that would be as impervious to corruption as possible. And so how do you perhaps insulate a minister from taking money to do things that would be perhaps against the people, the will of the people, or the best interest of the nation, I should say? You pay them a decent enough salary so that they can act with integrity. I like the concept. It's also an incentive. How do you get some of the smartest and best minds to want to go into that line of work? You pay them a really good salary and offer them a really good lifestyle. And so you encourage some of your best and bright minds to want to go into government or government service. I'm down with that, actually, when it comes to the U.S. I'm actually down with tripling the salary. And it's not, I wouldn't be down for it to pay the existing crop triple their salary. The idea would be you triple the salary in order to encourage really bright minds to want those jobs and positions. And you get a new crop of people that compete against the existing crop. That's sort of, I'm down for that. I get that a bunch of people are not going to be down with that. But what, you want to pay Congress or Senate more money? No, I want different people in Congress and Senate to get paid more money. And then that position to be so competitive that if you're bad at your job, there will be so much competition for you, it'll be hard to keep it. That's what I want. And couple that with no more career, couple that with term limits so we don't get these career politicians. Anyway, I gotta get off on this topic. Anyways, VIX at 1550, so right at 16. Why not live in Thailand? Because I don't make, that's not like I'm married with 2 kids, Tom. That's not the sole focus and purpose of where I go. Can't be where can I smoke a fat blunt. It has to be, schools and safety. That I got to do. The other part is just sort of the bonus or the not bonus. You know what I mean? I can't make my decisions just solely based on where I can light up. But I appreciate your sentiment, Tom, and your enthusiasm for helping me navigate the laws here. You guys are the best. Anyways, 1550, basically the rule of 16, if you've heard of that. If you wanted to know what your expected vol is on a day-over-day basis, I know most of you know this, but you take the square root of the amount of trading days. So there's approximately 252 trading days in a year. You take the square root of that, it's 15 and change. So people round it up to 16. So whatever the VIX is, you divide it by 16, and that is your expected vol on a daily basis. So 1550, where it is now, that means That's your expected vol annually divided by 16. You basically should be expecting about a 1% move or inside of a 1% move 2 out of every 3 days, and perhaps an outlier move or something more than 1% 1 out of every 3 days. But if you're seeing more than 1%, then you were probably underpriced in vol. You know, you go a couple of days, 1%, 1.5%, then we shouldn't be at 15 or 16. And in fairness, it was a quiet day today, right? 0.3% or 0.36% move in the SPX cash and 0.5% in the NDX. It's hard to make a case that vol's underpriced relative to realized volatility of today. But that's not the VIX's job. The VIX is to overstate future realized volatility. And if you're telling me that the market sees future realized volatility as 1% or less, one, God help put sellers, and two, that's going to be a boring next couple of months. You know what I mean? You think you don't like 18 or 20 VIX or spikes up to 21 or 22 or trade disputes or DeepSeek blowing up NVIDIA. You think you don't like that stuff, or it's hard to manage. You get heart palpitations, or you're in the fetal position under your desk. But you only think that until you get into a 12 VIX environment and you're just like, oh, will you move already? Do something. Do anything. Just do something. I mean, even interest rates today, you know, you just want to poke them with a big old stick. Say, are you alive? Front end didn't move much, traded down slightly. So the front end of the curve lifted. Back end didn't do much, but they did rally just a few ticks. I would, kind of. I guess I saw them at 115 and like 22, 30 seconds, something like this. So at least from where they were trading when I last looked at them, they rallied a couple of ticks. So the bottom line is, I think the curve probably flattened out a little bit today. LOL, Victor, get your priorities in line. Oh. That was the thing about Bali too. Bali was just absolutely beautiful, totally beautiful. I mean, we were exploring old volcanoes that had gone off in the 1960s, completely destroyed villages, but it then had left this area with like this black lava. Hiked up cool mountains, beautiful hot springs where the volcano is heating the water naturally and creating these hot springs. We went to this monkey sanctuary with just God knows how many different species of monkeys. We just walk around in them, next to them, over you. Hundreds of them. No, I mean, there were thousands, but like hundreds at a time. Nobody protecting you. And, but Indonesia is like, just like Singapore when it comes to that stuff. It's like, come on, people, chill, bro. Just chill. That would be like, can you imagine if the simulation went slightly different and like the whole of society was like adamantly against oranges or some other thing that came out of the ground? You know, it's kind of wild that we do this. And for really ridiculous reasons, if you go back and you explore the history, I don't know. Somehow, I get on these kicks, man. I'm sorry. I'm going down the rabbit hole of why we've outlawed these substances. I can get synthetic. I'm behind the outlaw of synthetic substances. I'm down with that. Like I'm not in favor of caffeine and added sugars, meth. But I mean, come on. A leaf, bro? A leaf? Chill, son. All right. Not much action in the yield curve. I normally bring up the pictures of the yield curve, but I honestly think, given the muted response here, there's not a real reason. There's not much delta in the last time we looked at those pretty little pictures and where we are now. But I suppose if you're long bonds, it's probably no volatility is good volatility, right? We are now approaching sort of this area of previous support right around 116, and it didn't act. We didn't play around this level for very long, so I wouldn't expect it to be a heavy resistance area. But 116 is a little bit of a line in the sand, and if we can get through it, likely the next area of resistance or previous resistance was right around from 119 to 120 in bonds. And I had this conversation with Chris yesterday. You're equidistant in this move. You could just as easily get to 120 if the cards fall in the right direction as you could be trading at 112, which is bottom end of this range. Do I think I think we've probably overdone it on the everyone getting super excited around the potential of future growth and inflation and the need for Fed hawkishness. I think we completely overdid that. As Ilya and I had been talking about, we're moving back the other way. We're finally getting that trader's bounce that I was hoping for. I don't know if it lasts very long. But man, it was like swimming upstream, waiting for this sort of trader's bounce in bonds, but you have to know it's coming, right? Like it was hard to imagine that these things just straight line it all year long. And at some point, once you got to 4.6 to 4.75 was sort of your first line in the sand. 5 was going to be your second one. And then things had to get sort of crazy, but it was in the cards to get to 5.25. And I think we stopped right before 5%. So we put pressure on anyone that got in early from 4.6 to 4.75. We pressed 5%, and it seems like we're backing off here. I'm just going to throw in front of you the GDP now, because the other day we had this massive revision. For those of you who don't watch this thing. But we were just on February 5th, on February 5th, the GDP now, which is effectively a real-time estimate given current data on where the Atlanta Fed sees GDP. And this is, let's see here. This is first quarter GDP. And it is now 2.9%. We're still above trend at 2%. It's still near 3%. But to put it in context, on February 3rd, it was 3.9%. So that thing dropped 1% in a couple of days. So it's a big difference in how the market is seeing growth. 1% haircut from 4%, which is crazy bonkers upside, down to 3%. And I think that has a little bit to do with what's happening right now in bonds. The flip side is it's sort of interesting, man. You have the Fed sort of talking up the risks of inflation. I forget who it was the other day. I think maybe it was Barkin, maybe it was one of the other ones, but basically talking about how inflation is resurging. Good call. But I think if you can continue to get base effects and downward pressure on inflation, what is that sound? If you continue to get downward pressure on inflation, and then obviously growth expectations are cooling, why wouldn't bond yields drop? Why wouldn't they drop? I mean, I get you have the threat of tariffs and increased prices or whatever, but I also think like I think people should remember the weightings of like CPI. Do I think if maple syrup and the cost of eggs, do I think if that stuff goes up, it's going to be more painful for citizens? Yeah, I do. I think you're going to notice that inflation. But I think if you didn't go through this last couple of years and go, oh, some things matter way more than other things. And would tariffs impact the price of housing? Maybe, but to what extent? Maybe, the cost of lumber coming from Canada, if that's significantly higher, can that juice up the price of the cost of a house enough to move the dial in your month-over-month readings? Maybe, but those are the things that matter. It's sort of unfortunate to say this, but the weightings of what you're paying for at the grocery store at the end of the day, it really doesn't matter as much. And so I think that context you got to keep in mind. Most people need to keep in mind this like knee jerk. I'm not saying it's not inflationary. I'm saying on this tit for tat, if the cost of whiskey goes up, you guess how much impact that's going to have on this reading, and guess when. So the likely scenario is you get the knee-jerk reaction in inflation expectations, because that's what we saw. The tariff scare happened and forward inflation expectations moved higher. But my bet, if that happens, is the overreaction to inflation expectations is probably going to overreact relative to how the number actually moves in the 6 to 9 months between the time it takes for all that stuff to actually filter through and start showing up in the data. China slapped a 15% import tariff on LNG. I got murdered by like 5% today. All right, that's growth in bonds for just a second. Let me see what you're saying. Wow, Victor, dry times, huh? Yes. You know what's crazy? You guys keep bringing me back to this topic. Clearly, we have similar interests. I'm a better person, like when I can slam a gummy at night. You put the kids down, or maybe just before bedtime, you throw in a gummy. Now we're playing lions, daddy lion and baby lions in the bed. It's the greatest. Reading a bedtime story, then they go to sleep, and then you get the opportunity to reflect on the person you were, the stuff you got angry at, or the stuff that you let impact you in some negative way. You start getting a new appreciation for any like amazing things that happened in the day, or the accomplishments, the moments you had as a family. And then you wake, you go to bed, get a good night's sleep, you wake up refreshed and a better person. It's not about the dry thing, because I don't like go around lit up. Just pop a little gummy at the end of the night. Think about yourself. See yourself in a new light. And then go, I liked that. Tomorrow I'm going to appreciate that more. I didn't like that. I'm not going to do that tomorrow. I'm not going to be that guy tomorrow. So that's why I like it. Without it, I'm just raw dogging life. I'm just raw dogging life just by myself in a single consciousness. Shan says, then rip the absolute fattest dab. Bro, I can't. I don't know if you missed that part of the conversation. I cannot. Catan says, come on over, Victor. We get the pizza too. Now, see, you had me at the first part, but like, I try not to do the pizza stuff anymore, I'm like, just fruits. I'm trying to do the one meal a day and just fruits around it. So I wake up, eat fruit, maybe do like a light lunch, but mostly fruit, and then try to do the one meal a day in the evening. I can't mess around with pizza or snacks or any of that stuff right now. I'm on a mission. Perfect. Lone says perfect way to end the day. I end my day, a hot cup of tea, a good book, and a fat ass joint. What are you reading right now, Lone? Actually, everybody, I'm curious. What are you guys reading right now? I'm not going to comment on all the books, but I'll go back and I'll read it later. I'm just curious. Are long bonds kind of consensus now? Ooh, that's a good question. Kind of looks like they are pressing resistance. That's really interesting question. I don't know. I think it probably depends. Around here, it probably seems like consensus. I would say in the macro world of people that I listen to or speak to, I don't think so. I think higher yields is probably the consensus. But I just think everybody knows, everybody kind of feels like you don't go in a straight direction. You don't go in a straight line. So I don't know. That's a really good question, son. So I'd have to go look at the positioning data. I'd have to go look at some of the survey data, which I haven't. But I will do that, and hopefully I'll put together something for next week. Really interesting question. Are bonds kind of consensus now? So the way that I answer that question, by the way, son, is I don't just give you my anecdotal take. What I would do is I would go look at positioning data on ZB and ZN, and you can kind of see the Z-score of positioning data. I look at vol, and then I look at surveys too. And I don't put a lot of weight into surveys, but I do think they help to tell a bigger, broader picture of when people are on one side of expectations and the trade. So the real answer, son, is I'm not going to shoot for the hip on that, and I love the question. Let me get back to you. A couple of movers before we get into some other stuff here. Palantir, what a freaking day. What a powerhouse. 9.8% to the upside. And don't say I didn't tell you. Don't say I didn't tell you. Anyone that's been watching me for a while, and every once in a while you get lucky. But, I mean, it's like I'm not excited about this company going to where it goes. I'm not excited about that future, but I told you guys, emotional hedge. Emotional hedge. With any reduced freedoms or lack of transparency, lack of privacy that you're going to get as this company ascends and has more private and government contracts, you probably want to get paid off as a sacrifice for that privacy and transparency, lack of transparency. Don't say I didn't tell you. But now, who's reading Thinking in Bets? Catan, good book. She's written a few, right? I think that was her first one. She was so successful. She wrote another one. Annie Duke, poker player, who wrote a book, Thinking in Bets. But it's sort of what we do here, right? I think most people, when they start out in the trading world, they think about the world binary, up and down, long stock. They're basically long only, and they think, what stock should I buy? That's the question they ask, and it tells you how they think. It tells you sort of what level of consciousness they have with regards to the market. What stocks should I buy? That's where you start. Where you might head after a while. My level of consciousness, which I'm sure there are many more levels above this, is what do you think about XYZ? Meaning you could have a positive stance, a neutral stance, a negative stance. You could have a first order direct opinion. You could have a second order, third order opinion. So yeah, anyways, I like that book because it talks about sort of thinking about the world through the same lens that we think about things, through probability distribution. And so for her, I think poker taught her to think about life in this probability distribution, and for her it helped to become successful. She believes it can help you to become successful. I believe the same thing, that markets, not poker, same idea, but markets taught me to think in probability distribution. And that taught me to think in probability distribution in all parts of my life. Whether I'm a parent and I'm trying to handicap the risk of, my kid bonking his head on the corner of a table or something like this. It's not binary. It's like the range of risks. Whether it's to take a big leap of faith from a career point of view or perspective, take a big leap of faith when it comes to moving. I've done crazy stuff in my life, and all of the time it's sort of thinking about the outcomes as ranges of possibilities. Anyways, I don't know how this turned into endorsing Annie Duke's book, but good one. You guys have got some good books out there. Eric Simmons reading The Real Anthony Fauci. You're going to be a different person on the other side of that book. You're going to see the whole world in a completely new light. Congratulations. Another good one along the same lines is Deception by Rand Paul. It's sort of like it's the same idea, but RFK wrote that book sort of in the midst of everything that was going on. So it was a bunch of pretext. And then Deception by Rand Paul is sort of like everything after, which is an interesting read as well. All right, let's keep cruising here. Good stuff from you guys. Anyway, Palantir just absolute insane to the upside at 111.28. I would not be chasing it here. I'll put it this way. I am not and would not be chasing it here. That doesn't mean it can't go higher. It just means I don't know that I would chase it here. And if I was going to play this, I would do it with the minimal amount of risk possible. So like upside call spreads, and I would definitely spread it off because the upside implied vol, because retail traders are going after this thing like rabid dogs right now. And sometimes when that side of the boat gets too heavy, it's not necessarily a good sign. So front month implied vol right around anchored from the mid 60s to 70%, which is about anywhere from $8 to $12 move over the next 30 days. That's about $15 over the next 30 days. So I'd play that as your range, maybe double it and play that as your range. So the potential of 30. So if you put a position on and you can't stomach a $30 downside move, that position might be too big, or the risk you have on might be too big. So what I might do is just put on some little cheap upside call spread, go out of the money, put on some cheap upside call spread. Why? Because you're selling that out of the money call against your out of the money call to help offset some of the dumb call skew that's in here, because people are paying up for out of the money calls because that's what us retail gens do. If something moves high, the bet is it's going even higher. Everyone sees it's up 10%, so they bet it goes up even higher today. On a super short-term basis, we're already closed here. But would you bet up or down tomorrow? Tomorrow, I bet down. So if I was going to get long and you get weak tomorrow, I bet long. If you get weakness tomorrow, you bet up tomorrow. If you're so degenerate that you think this thing goes higher, bet it long into weakness and do it with an upside call spread where you have very little risk. Upside out of the money call spread, you have very little upside risk. And if for some reason this thing does keep cruising higher, you get paid. But I wouldn't chase. I personally would not chase this thing. It's already 60. I said this morning, and I think CNBC ran this thing. I don't make a habit of, I've got a lot of respect for CNBC, and they let me come on and talk sometimes. I don't know why. I got a lot of respect for them, but I do think sometimes the articles, you got to be careful. You got to be careful listening to the signal from the articles. That's all I'll say. Anyways, but it did put out that the price to sales ratio in Palantir is like 60, and the next closest in the S&P 500 is 30, and That's a company called Texas Pacific Land. It's an energy company. And then the next one after that is Intuitive Surgical. It has a price to sales ratio of 21. So these companies, I mean, it is more than double the next closest price to sales ratio. That's not always bad. It just means the market is anticipating more sales, and this company could grow into its price to sales ratio. That's possible. But a lot of good news is priced in right now. All right, let's see what's out of the money. Broken wing butterflies on Palantir. I like that too. That RuPaul guy ran ball, my friend. Should Elon leave Tesla, Catan? I think you ripped a big spliff before asking that question. Why would you even ask that? Of course not. Of course not. Why would he? People say this all the time. You know what? People tend to talk, they project themselves. So when people talk about, like, Elon running so many different companies, here's what will happen. As long as that's going good, nobody will say a damn thing about him running multiple companies. They didn't say anything about Jack Dorsey when it was going okay, and it was mind-boggling, the idea that a person can run 2 publicly traded companies. But when it's going well, they don't say anything. Whenever there's a hiccup, they go back to the same talking points. And the talking point is, he's got his hands in too many things. He needs to focus. And they always say that same thing. But I suppose my question back would be, like, who can they announce is running Tesla? If you're a Tesla shareholder, who could they announce who you'll be just as excited, if not more excited, and you wouldn't dump part of your position? Can you pick a person? And if the answer to that is no, maybe 25% of Elon's time is worth 100% of almost everyone else's. And I also think because you can't imagine yourself running 1 company or 2 companies, let alone 5 companies or however many he's leading right now, that doesn't mean other people cannot. And perhaps he's the richest man in the world, or one of them, there are others. He makes this claim that Putin's richer than him. Because even though they're not his assets, they're some oligarch's assets, they're really his. But anyways, the point is, perhaps you get to that place because you're really good at time management. You're really good at priority. You're really good at sort of seeing a matrix that other people cannot, and figuring out not only how to solve problems, but when to do them, when to delegate them, who to delegate them to, how to hire really well. He probably created a really good team. So anyways, I don't want to go so far on this, but no, I don't think he should leave. And I don't think he's problematic as the leader of Tesla. Do I think he's impaired the brand equity he's built with his existing customer base? Yes. Do I think he's opened up the brand to a group who wouldn't have previously held the brand in high esteem? I think he has. I don't know the net effect of those 2 things. And that's why I think it's left out of the conversation. Has he offended previous brand owners? I think there's no question about that. The only question is, how many new buyers has he opened himself up to? And is that offsetting? And does it even matter? Like a rising tide lifts all boats. If we're headed to 3% growth, I don't know if it matters. If we're not headed to that world, if we're headed to trade disputes, less growth and less money dollar availability, I don't think it matters, quite frankly, because in that case, we're going to have a lower tide across the board. What do we think about crypto being pretty heavy against stocks at all-time highs? Chris asked this question the other day. I think stocks are so damn stubborn. It takes them longer. That's one. I would bet, I'm betting down as sort of this binary, and thinking about this in a binary way. But I also think Bitcoin rallied in the same way like Tesla had this initial upside momentum, and it was really election fueled. It was the possibility of Trump being so close to the presidency and policy making. But at some point, the optimism ends and you sort of have to price what's the actual impact. Now that your initial demand for the instrument, for the security is over, now it's like, okay, let's go do some pricing. Let's go do some work on this. And we're already $100 off the high in Tesla. It doesn't feel like it, but we are. It might not feel like it. I'm sure it does for some. In the case of Bitcoin, I think it's fairly similar, right? There is no Bitcoin reserve. There was a commission to explore whether or not we should create a Bitcoin reserve. So I think in some ways, you know, replacing Gary Gensler, going a different direction with the SEC is probably net positive. In other ways, some of the campaign promises are probably going to get lost in this commission, right? Is the commission going to come back and say, yes, you definitely should? No, that's not how commissions work, right? They give a wishy-washy, mealy-mouthed answer, and that'll ultimately leave it up to the main stakeholder decision maker. And so this is probably a big kick the can moment on the whole Bitcoin the whole holding Bitcoin in reserve at the Treasury. So, you know, I think maybe some of that initial excitement and upside of sort of the first crypto president or whatever the moniker was, I think probably some of that's gone. And that comes out of the price. And so the election premium, that Trump trade, I think it was unwound a little bit over the last couple of weeks. That's what I think. Do I see it as anything more than that? I don't know. It's probably too early to call. I think with Bitcoin at 96, I don't see it as some sort of broken. It's like broken. It's a new barometer for risk assessment. I don't see it at 96. We've been here before. We've been at 96. We touched 90 a few times, and I think we're probably lower end. We're getting towards the lower end of that range. But until we break the range, I don't see it as signaling anything about risk assessment. I think we're in a 95 to 105 range for the last 3 months. And so it shouldn't surprise anybody that we're at the lower end of the range. So don't think too much into it, is kind of what I think. I swear I'm trying, but I just don't get excited by any crypto. I don't think anything's worth buying except Bitcoin. I think the other stuff, I don't know, fun might be the wrong word. I have not traded anything else except Bitcoin, Ethereum, and a stable coin, USDC. And I do not get why I would. Even Ethereum to me is sort of out there. I don't really, I get the value proposition in theory, but without the scarcity, I don't really get why I would be too excited about it. Ethereum is just a direct network play. So in the same way that Facebook has value because there's a network effect, trading Ethereum has value because of its network and the values extracted directly from the network. But that value can be diluted, so I don't really get why I would want to trade a non-centralized asset versus trade something that's centralized. I'd rather trade something with centralized clearing than not, if I'm going to go that direction, where you can dilute me as a equity holder. Bitcoin, I get. I think I do. USDCs, I get. I get to hold my money in my possession without you being able to lend it out, with the possibility that I show up to take out my money and you say we don't got it. I know that's a very low, we're past the, what's that Christmas movie? Every time a blah, 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 an angel gets its wings. What is that movie that's on the Great Depression? Whatever that movie is. It's a Wonderful Life. It's a Wonderful Life. I know we're likely past a world of bank runs, right? Because with the click of a button, there's more money to deposit into somebody's account to make the number look like it's there, which is really all people care about. You know, we're probably mostly past a world of like bank runs. Famous last words. But I still like the idea of having that money in my possession, which probably, when I think about it, is probably like a crazy, because even if it's in my possession, it can still be diluted, right? I can still be inflated away even if it's in my possession. So what are the odds that if you just put it in Bank of America, well, if they have some liquidity issue, they're just going to get loaded up. Or if you put your money in JP Morgan, they have some liquidity issue, God forbid, they push a button, they've inflated all of our money away, but everyone's got what they need. So what's the point of USDC? I don't know. If you consider that some banking institutions are too big to fail, I don't really know, now that I think about it. Tell me what you think. That was a long way of saying I get Bitcoin and the value proposition. I can even, in some cases, understand USDC as just a potential diversifier against a low probability outcome. But everything else I don't get. It's just it is so clearly a game of greater fool. Some people would say that same thing about Bitcoin, and I don't know. I'm not going to argue against that. But everything else is so clearly a game of greater fools. Anyways, crude oil off of its high over the last 2 weeks from $80 down to $70. That's probably what you want to see. The current administration wants to see it. Probably a $50 handle in a lot of this stuff. Natural gas down a little bit lower. Let's look at some of the movers here for the day. Beyond Palantir. Don't worry. Let's bring up. Here we go. All right. Whoa. Skyworks, Huntington got murdered. Ford got killed today, down 7.5%. This is sort of an interesting one, Ford. Because I've always thought of these companies, they're kind of too big to fail. They were like some of the original too big to fails. Just because there were so many unionized auto workers, it needed their voting block. And there's still a decent amount. And I think they still probably are, even with Trump. They still probably are. Do you take a bet here? Do you take a flyer on Ford? Tell me what you guys think. Is it cheap enough to take a flyer on Ford? Every once in a while, the people hate me for it, but every once in a while, Ford and GM get so cheap that I will buy them on a relative value trade, and all the Tesla stands and the Elon stands, they come after me. They absolutely hate it. Oh, are you kidding, bro? How could you recommend, or why would you buy GM and Ford? Don't you understand Tesla's the future, and their cost structure and blah blah blah? And they're always wrong. They're always wrong. Eventually, GM and Ford do this catch-up trade. And it is not a bet on GM or Ford winning this sort of future race. It's just Ford and GM are too big to fail, and whenever they look dire, it's probably an interesting bet because they have hundreds of thousands of people that your politicians need their vote, so they have to throw bones over there. Worst case scenario, there will be liquidity. I don't know if it's super cheap right now. It's not like pandemic scare cheap at $4, but at $9, is it cheap enough for us to take a little flyer on Ford and GM? Maybe not GM, maybe Ford. What do you guys think? Am I crazy? Let's see what you guys are saying. Vic, holy God, Major C coded. I'm going to read this, but you just took us in a wild direction, my friend. Vic, I don't know if you want me to read this, but I'm going to do it anyway. Vic, I've done X, meth, heroin, fentanyl, acid, etc. Mostly meth, though, and I had a good time. I got a kid now, though, so I can't do it no more. Now I slang, you're effing with me. Now I slang 0 DTEs to get my fix. You're totally effing with me. Ben says 7.8% dividend. Ryan Watson says agree on GM and Ford. I don't know. I think I just talked myself into going long Ford. And I sort of hate myself for doing that. But here's the thing about those factories. They can easily be repurposed. If you catch what I'm saying. Repurposed. Isn't that what we did back during the World War days? We repurposed our manufacturing, stopped making cars and washing machines and stuff like this. We started making bombs and munitions. That's the thing about those factories. They can be easily repurposed. Nah, I'd rather take a flyer on Rivian than Ford. I own Rivian too. Oh gosh, that's not it. I think it's this one. I think I own Rivian. I think I own a little bit. But I actually think this probably died. I think the opportunity for this, I'm guessing here. I'm gonna look at a daily chart, and I bet on the election this trade died. Watch, let's see. Yeah, look at this. Look at this slide into the election. It's recovered some since, which is interesting. So I might be completely wrong, but my thought was that if Trump lost the election, I thought Rivian was a no-brainer. Because I thought, given how the incumbent administration felt about Elon, they were going to make his life hell for 4 years, and they would likely prop up a lot of the domestic competitors. So Rivian, Lucid, and a handful of others. So I owned those as a hedge against what could happen if Trump loses. And I think I still own it. I didn't have a bunch of expectations for it. I'm kind of surprised to see it's. I haven't looked at this since the election. I'm surprised to see the upside. Those factories can produce the robots that will replace us. I think that's actually probably a more likely outcome, right? We stop building Tesla cars, and he starts building those Tesla robots. All right, we've made it to the end, so now I can talk crazy. There's a part of me that doesn't understand why I do understand why, right? Because the incentive structure says you all have to feed your families. But we are all currently in a big prisoner's dilemma. Which is we're all acting in individual self-interest to pay the mortgage, to put food on the table, to pay the daycare, pay for school, pay for trips, whatever your thing is, avocado toast, coffee, whatever your thing is. We're acting in individual self-interest. But Prisoner's Dilemma says people need to band together. And I just don't get how people don't understand that once you create both intelligence work and physical labor, and you put those two things in one entity that costs $20,000 to manufacture, I don't understand how people don't see that outcome, what that means. And people can wax poetic about some like utopia that brings us all to. It'll bring some to utopia. It'll bring capital class utopia. But I think what happens to everybody else is totally unknown, and nobody's asking for or demanding a plan. And they're just marching towards this eventuality. I do not understand it. It's like moss to a flame. Everybody's going towards this light. They all know that that's where we're headed. Our smartest, brightest engineers can get paid the more they advance us towards this. All of you log into ChatGPT because you think it'll save you time or give you added convenience, thereby helping to train these models, thereby eventually helping to... It's like... If everyone knew game theory, maybe we'd take a step back. And people will go, okay, I understand what happens when I use this thing. And the short-term convenience does not outweigh the long-term potential risk. So I'm going to stop using this, and he's going to stop using this, and she's going to stop using this, and I'm going to stop developing this, and I'm not going to take one step further until we develop some sort of plan that all of us can get behind. I know what I'm saying is sort of impractical and improbable, which is why it doesn't happen. But I'm sort of fascinated by this sort of weird momentum of society pushing towards this eventuality, and we all don't really know what happens when it comes. Nobody knows. Some people are better prepared than others, therefore some are less fearful than others. Some people don't really have a choice or think they can't impact the outcome. So we just, as a society, are floating towards this outcome. Most of you, if I had to bet, you don't want it either. There's a handful of strategic opportunists that are like, this is coming, so let me figure out how to make money off of it or position myself well. And there's no real thought to whether or not you want the outcome or the outcome's going to be net positive, net negative. It's just, it is what it is. So let me figure out how to monetize this. That's probably, I don't know. I'm sorry, I'm just kind of ranting now, but I cannot get over this weird feeling that we're all moving in unison as a collective society. And I also can't shake the feeling it's not the outcome that most of us want. Most. Nobody's doing anything or saying anything. It's just sort of this monotonous glide. Anyways, all right. And by the way, I'm not scared. It's not like I'm scared of the future. I'm not scared of robots. I'm not even scared of intelligence. What I'm saying is once you give the power away, you lose leverage as a labor class. Your leverage is in your labor. It's the only thing you ever had. It's in your labor and in the potential of your dissatisfaction leading to a violent revolt. It's the threat of violence. Those are the two things that the labor class has as leverage in a constant negotiation that forms society and reforms society. You're about to lose both of them. You're going to lose your value as a labor participant. You're going to lose your value as a knowledge worker. And with AI and drones and robot police, the threat of you revolting is like, what are you going to do? And nobody has an issue with this. To me, it's wild. Nobody cares. I'm sorry. Son says, I love AI. I use Grok daily. I know. And you liked Facebook too, right? Now somebody's got all your data. And some of you liked 23andMe to find out you were 1/8 Swahili or something like that. Now somebody's got all your biometrics. The point is there is always a trade-off. There is a convenience trade-off for some piece of information or privacy or control. And at some point, my question is, when does everybody wake up to the trade-offs? That like maybe it's not worth that swipe or that dopamine hit because somebody liked your photo. When do people wake up to that? And that's when it gets interesting. But maybe everybody's whacked out on whatever their 7 deadly sin is. Whatever your thing is right now, you can get a ton of it through your phone. Whatever your like method of dealing or coping or getting that dopamine hit, wherever that's coming from, social media just amplifies it. You can get infinite amounts of whatever it is delivered to your doorstep. And as long as everyone's dopamined out, I think we just keep marching towards this eventuality. I'm sorry. I don't know why I did this. Victor, I think you might be overestimating the intelligence level of the general American public, says Donna. You are far, far above the average. I'm definitely not. And I don't think I'm overestimating the intelligence level. I just think a lot of people don't have time. And so they're following their incentive structures. I don't think I'm more intelligent than people. I think I took a year off work and I had the chance to just think about stuff for a year. And most people don't get that opportunity. I think with that opportunity, I think people start seeing a lot of things differently. Major coded, true story, 4 years sober. All right, man. Well, I didn't mean to make a joke out of it. My apologies. And I appreciate you sharing. Congratulations on 4 years, my friend. And 0 DTEs are a hell of a way to get your fix. and better that than anything else. So Matrix Decoded, I salute you, my friend. Congratulations. It's got to feel really good. I can only imagine. And thank you for sharing. Hey, if I could press a button and go caveman, I would. Here's the wildest thing. The wildest thing is when you stop buying shit and going for the short-term convenience and you take, let's say, you just make your own salsa. The amount of gratification you get from not going fast, going slow, knowing what's in your food and then getting the outcome, even though it took you an hour and a half to make something so simple, you get way more gratification from it. So the irony is way more convenience, less gratification, less sense of purpose. So are we living in a world with a bunch of cool stuff? Kinda. But is anyone, I don't know. I think the people that are happiest probably aren't just going around thinking they can buy their way to it. Like the more shit I order on Amazon, the happier I'm going to be. I'm guaranteeing the people that probably score happiest on a happiness index, I guarantee they don't think anything like that. Google ex-workers warned of some of this. They made a documentary, says Joshua. I haven't seen it. Can you put the title in here? I'm going to go live in a van down by the river. Shout out to, or RIP, Chris Farley, one of the GOATs. I work in live events. Robots are rigging moving lights on trusses 30 feet in the air or sound systems. I'm safe for a bit longer, I think, says Jared. I know, bro. We all know it's coming too. We are trying to convince ourselves that it's not coming. You know what I mean? And there are a few people in powerful positions that are saying the same, but we know. Look at the labor force participation rate since the internet and the smartphone. Go look at it. And they can tout the unemployment rate all they want because they think people are stupid. Go look at the labor force participation rate since the internet. And you're crazy if you think hundreds of thousands of these things are not going to create massive structural unemployment. You're crazy. You're out of your mind. You're living in a fantasy world. Labor has an opportunity to advance themselves, such as I have, learn a new skill, prove that you are competent, and then raise your rate. I've been doing it for 10 years, thank God. So, Jared, I agree with you 100%. I agree that, like, I'm not one of those guys who just sits around and goes, this isn't fair. You know, I want to think through solutions. And I do agree you have to constantly improve yourself to make yourself more marketable if your game is selling wage for earnings. Some people, that's not their game, right? They use capital to make capital, not wages. But if that's your game, I agree. The only thing I'm saying, Jared, is if available jobs shrink, everyone can be adding skills and there's still going to be losers from that. So I'm sort of talking at a macro level, not at an individual level. At the individual level, you're forced to compete, and that's what I'm saying. The incentive structures make you have to use ChatGPT because you're trying to be competitive, you're trying to save time, you're trying to have the best output that gets you ahead, that gets you the promotion, that gets you whatever. So your individual incentive structure says, I must use the tools and technology available to me to make me the most productive. I'm totally with you on that. But I'm also saying at a macro level, if it's cheaper to hire a thing for $25,000 and I can work this thing 24/7, I just have to pay its maintenance costs. I don't have to care about HR because this thing's not going to come complaining. It's not going to take sick days. You get what I'm saying? Like, at some level, then there are going to be less of those types of jobs. So regardless of those people who have worked to add skills, there's going to be losers out of that pool. And I'm talking about the macro level of the incentive structure that we're likely creating, not the individual, you need to work hard and add more skills. I get that. That's the right attitude and mentality always. I'm speaking to the likely macro outcome. People fixing to have personal robot assistants here fairly quick, I think. Part of being happy. Ooh, Donna Ski's about to drop. I'm going to end on this one likely. Part of being happy is learning how to be grateful and satisfied with what you already have. Don't need to buy a new thing to be happy. Amen. I'm actually going to read this one more time. I'm not going to say a damn word after this. Producers, if you are listening, as soon as I get done reading it, I'm going to say peace to everybody, and I want you to roll credits. We're going to go out on this. Donna Ski says, part of being happy is learning how to be grateful and satisfied with what you already have. Don't need to buy a thing to be happy. Peace.